and one not only be here, but also make sure that this event is successful. Earlier on, Honorable Minister had recognized Mr. Julius Kaketo, who is the CEO, Pearl Bank. Someone mentioned that is our bank. And I told them that as the Bank of Uganda, we can't say that because we are supposed to treat all financial institutions fairly. So then we have Ms. Mona Sebuliba from Abbey Finance. In the best interest of time, Honorable Minister will recognize the rest of the protocol as we move along. Now we are going into speeches. Our very first speech is from the Governor, Bank of Uganda, and the Governor, Bank of Uganda, ladies and gentlemen, is represented by the Deputy Governor, who is none other than Professor Augustus Nwagaba. And before he comes, please allow me mention the following about him. One, he is an international consultant and very passionate on poverty eradication. That is one. Two, he is a global economist. Three, he is a gallant intellectual, having been in the academia for quite some time. And very lastly about him, I have so many things to mention about him, but very lastly, he's a very committed Christian who knows all the Bible verses relating finance in the Bible. So please join me in welcoming the Governor, Bank of Uganda, representing by the Deputy Governor, Professor Augustus Nwagaba, to come and deliver his remarks. And he's a Rotarian, I'd forgotten about that. I can't exhaust the so many things about Professor Augustus Nwagaba. Professor, you are most welcome.
Thank you. So on that note, praise the Lord, everybody. Praise the Lord, everyone. Thank you. All protocol observed, because you are too dignified. I don't want to make any mistake, with the exception of my Minister of Finance, my brother Matia Kaseja. We are very glad to see you and very, very happy to come and grace this occasion. We are also glad that you invited the Bank of Uganda. So I will request my team to stand up so that people know us, that we are here. Let us, all of us, our team, we are here in very large numbers. Thank you very much. Thank you very much. And we want to thank you, the financial inclusion sub-sector, for inviting us. I have a small comment to tell you that I was in the UK on 22nd of this September, and we had what you call the Africa-UK Summit. In that delegation, in the African delegation, I was in the African delegation, and I was the one to give the keynote address at the White Hall in London. I had my sister Canon Ruth Nankabirwa, I had my sister Edith Nakarema, I had David Mohozi, our Minister of State for Internal Affairs. We had our formidable Rebecca Kadaga. It was a formidable team. In that team, I was really able, and really God made it for me, to raise the bar for financial inclusion. I gave the keynote address on 22nd of September at the White Hall, and guess what we really discussed? Financial inclusion in that UK-Africa Summit. And that summit eventually led to 23rd. Over the same September, we were invited at the British House of Commons by Rami Ranger, those who know London politics. And Rami Ranger is a member of the Induja group. He arranged a lunch at the British House of Commons, and yours truly was recognized in the World Book of Records. They gave me a certificate in the World Book of Records. I have it, certificate of excellence for the 30 years work I have been involved in speaking for the poor and for financial inclusion. The citation of that certificate of excellence is financial inclusion work I have done both in Makerere, in my teaching of my students for 26 years, and also in the work I've been doing as an international consultant, as you have heard. So I'm with you. I'm your ambassador, except you have not recognized me at all. You have never recognized me. Can you imagine an ambassador, your honorable minister, who appoints himself and you never recognize me? I am your 150% ambassador. I speak for you. I've been speaking for financial inclusion. I've been speaking for the poor. As you all know, globally, I cannot finish 2 sentences without talking about the poor and the people who are not in the monetary economy. And this is why, this is my mission, my minister. If you want to define me, I want to be clearly defined that I speak for the poor and those people who are not in this monetary economy. And that's why I also was very, very glad to come. So I'm very happy to be here, therefore. The Right Honorable Minister, Prime Minister, who is supposed to be here, and our Minister of Finance, my brother Mattia, senior colleagues in this subsector, financial subsector, and chief executives from regulatory agencies, esteemed development partners, leaders from financial institutions, my colleagues from academia and civil society, distinguished guests whom I'm seeing here, and very, very smart, and ladies and gentlemen, good morning, everyone. It is with great honor, of course, to be here, and we appreciate that. I welcome all of you for this 2025 Financial Inclusion Forum. It's a very wonderful forum, and today's event offers us opportunity to reflect about our financial inclusion journey, which has been very long. I've been with you for all these years, largely powerfully in the academic sector, but also with international agencies, with the World Bank, with multilaterals, bilaterals. We have been contributing significantly to that subsector, and it is therefore a call for action to deepen our commitment to building a financial system that leaves no Uganda behind. That's what we mean by financial inclusion. We do not want growth, Honorable Minister, which is exclusive. We want inclusive growth. So a financial system is the one that plays a big role in therefore bringing everybody in this fold. As I look across this distinguished assembly here, I see more than titles. The number of people have been recognized, but I see more than titles and institutions, banks, leading institutions in the financial sector. But this is not what is here only. The people who are here are change makers. It's a potential or real, and who can carry power to transform this financial system that we are having. There's no country. I've done research we have 196 countries. I've done research in 126 of them. And what I was doing, I was regressing. I was calculating the factors. I wanted to know the exact factor that transforms an economy from being a rogue economy to one of the leading economies. And my major first culprit was Singapore. And to cut the story short, there is no country in the world, get it from me today, which has ever transformed its economy without pooling resources, but particularly without, my minister, without having indigenous capital, without having the fabric, indigenous fabric that pulls the capital. Let's kindly put up your hand if you know it. You are not there. So every country, 196 of them, including Vatican and Monaco, where in my sample as well, all of them have pooled indigenous capital. And one can argue that South Korea is not in that category. South Korea pooled resources, but they had also one of the largest planning authorities in the world. Under General Park Chung, he had Mr. O, who was a minister, he's a minister was Army General as Minister of Defense. And Mr. O was able to marshal support. And even if they got American support, but he was able to be marshaled together indigenously and pull South Korea the way you are seeing it with all the phones you are holding, which are from General Park. So, therefore, it is very, very important to look inside and know that it is only from inside. The power is from inside that can therefore drive these forces. Those who are economists, this is what we call the neoclassical theory of development. Development is initiated from within. It can never, let me repeat it, development can never be initiated from outside. Propulsion can be from outside, but ignition is always from within. Therefore, it's an honor for me to share these thoughts for us. And over the past, therefore, years, Uganda has had tremendous progress on its financial inclusion journey. The most recent data from the World Bank, especially the Findex report, indicate that 73%, my minister, of adults have an account with a financial institution. This is a very, very great leap forward. 73% of Ugandans have some form of an account, either in a commercial bank or in these fintechs. And this is tremendous improvement from when I did the last Finiscope in 2013. I presented at the Bank of Uganda. I think the number was 23%, I remember that time. The first Finiscope study we did here. I was the lead consultant in that study. And I presented the governor of the bank at that time and the team, 23%, now 73%. We have added to 50%. This is very, very good growth. We have seen the transformation, therefore, power of mobile money, circles. We have now licensed 3 large circles, my minister as well, including EBO, those who come from Mukashari and Mbarara, and 2 others. There is one major one which is still refusing, which we all know, but it will come. We have seen tremendous power of mobile, therefore money, circles, agency banking, Islamic banking, all these are financially intermediating this process, and we want to support them. PDM, which is a very, very large government program, is doing nothing other than also contributing to this process, ensuring that what are we doing in PDM? PDM is focusing on one major factor, making as many people as possible to come within the money economy, not leaving them in the subsistence sector. So these milestones have therefore opened doors for millions of Ugandans to be in this sector, that now we know that progress must be measured not only by access, but also by usage. What we want to tell you is that when we said 73% of the people accessing either mobile money or have an account with any kind of fintech, the issue is not access, but how are we using it, the quality of utilization of those platforms. Now, in terms of inclusive finance as a catalyst for shared prosperity, Honorable Minister, financial inclusion is more than opening an account. It should enable people to participate fully in economic activity, and in a country where women, youth, persons with disability, refugees, and rural communities continue to face barriers, we need to do something here. I have been working, before the president brought me to this central bank. Minister, I was working in fragile stage. Up to now, my office in Somalia, I haven't closed it. I've been working in Somalia, Central African Republic, Guinea-Bissau, South Sudan. By the time the president appointed me, I was going to Libya. So the African Development Bank had requested me to help these African countries, to the ones which are not really proper monetized economies, to help them. And you need to see one country which is very interesting, and this is Somalia. In Somalia, if I can, because I'm still working with them, helping them, in Somalia we don't have money, this money you have in the pocket. No one has anything called money. Somalia, 150%, my minister, is digital money. It's digital money, for different reasons, of course. There are 2 countries in the world whose currency is digital. The Somalia and the Netherlands, of course, for different reasons, both of them. Those who have been moving and bothered with international political economy. Even the beggars in Somalia, on Johara, for example, those who know Somalia very well, and our UPDF, I want to congratulate our Uganda People's Defense Forces, are the ones who, they keep us very well. We have a very good name. Once you say you are Ugandan, you are just like a king there, because they know what UPDF has done. So we move freely, but even the beggars beg with the phone. And even if she doesn't, or he doesn't have a phone, he has a phone number on the palm here, and people give. This is the level of digitization that these people, and the level of inclusion we are talking about. So this forum, therefore, should have access, usage, and advancing inclusivity in the sector. To do that, we need to address ourselves to the following questions. I have questions here. And number one is, how do we ensure, Honorable Minister, that financial products are designed with realities of ordinary Ugandans? And my brother Shash is here from Baroda. Because your products in commercial banks, you know, when we talk about access to services, how do you make a commercial bank product access to a service? Is it because you brought a commercial bank near? No. The nearness of a commercial bank does not make me use your services in a commercial bank. Those who are from here in Uganda, by your son, your home being near King's College Budo, does it mean that your son will be in King's College Budo? Or your daughter will be in Gayaza because your house borders with the fence in Budo? Your girl or daughter must have the marks that take her to King's College Budo or Gayaza High School. So by being near these banks, unless you have a product which is usable, which I can use, look on demand side as well. Most of these commercial banks, you have been looking on the supply, just come on the supply side. But we need also to look at the demand side. Can I use your product? Is your product usable? This is what we are saying. And on this note, Honorable Minister, for example, on the digitization, while we are moving very, very slow on digitization, it is still very extremely costly to make a digital transaction here, a commercial digital transaction. You may find somebody driving to pay 50,000, somebody in Tinda from here, somebody would prefer to drive and pay somebody 50,000 rather than sending the money on, because now cashing it out is extremely expensive. So how can we make it, this question is how can we make it more affordable to digitize? And then we can say the economy is moving and everybody is using these platforms. How do we build trust? This is also very important. Because trust, business, let me tell you, you good people, there is no way you can do business without trust. And therefore the Ugandans who are here and you want to every time circumvent things. I know Ugandans you don't like formalism. And you cannot go anywhere without formalizing things. The ladies who are here, if you want to protect your marriage, I'm also a marriage counselor, they didn't add it on my CV. Let me address myself to these young ladies here. I'm a marriage counselor, a qualified one, not one whom they have picked on the road. I've been trained by Stanley and the Chobis and Nora, the Chobis, those who know the Chobis. I have that certificate with my wife. So we are, these ladies, let me address yourself. Formalize your marriage. If you don't, I don't want to see you crying after things that make sure you formalize. Ugandans don't want to formalize things. You want to take things easy. Easy come, easy go. So if you want to do business, ladies and gentlemen, you must learn to how to formalize things. We talked about IFRIS. You oppose it. We say formalize your business. You don't want to formalize business. But how can you now supply government? How do you supply serious institutions? How do you supply World Bank? How do you supply Bank of Uganda? How do you supply serious organizations without being on euphemisms? You are not using IFRIS. You don't want anything called posting an invoice. That for you just want things to move in awkward ways. You cannot go far. You can't go far without formalizing. So I'm therefore finishing, my minister. These are the questions that need to be answered. And our reflection, I want us to make a reflection on 4 things. One, to remind us where we have come from. This one I've explained very well on the journey. Second, to challenge, to design products which are usable. This one I've ably explained. And to look at the future. I was at the Central Bank of Kenya recently, and we are talking about now green financing taxonomy. The Bank of Uganda has already developed guidelines. We want, when you give loans, especially commercial banks who are here, both tiers, 1, 2, and other fintechs, we want you to incorporate, to design in those products, green financing taxonomy, my minister, so that these loans are contributing to ESG and you are sustainably certified. We want sustainability certification, and we want a country which can move with the others. We don't want to move alone. You can't go far. I'm sure there are Liverpool people here. For us, we are money. You Arsenal people want to kill us on the road these days. So third, we look at the future with green finance, and then the last year we address the cornerstone of financial inclusion and consumer protection, protecting our consumers. That's when you can survive. So ladies and gentlemen, the reality therefore remains that 37% of Ugandan adults are excluded. Still, Minister, 37%. Even when we have PDM, we have all these fintechs, we have all these good big banks, 22 of them in tier 1, and the others, we have very large circles, still 37%. Can you imagine? Are still outside the money economy. This is not good for economy. This is not good for fiscal metrics as well. For your side, Honorable Minister, where will you get money to finance now government programs? So we need as many people as possible to come within this bracket. And we believe that the stronger we build these partnerships between these sector players we have, the regulators, development partners, and the community ourselves, and educating them on awareness of these products, the better we can move. We believe that the 5th phase of government national backbone infrastructure and e-government will aim at enhancing this process, and we now have extension of internet connectivity has gone to West Nile, Eastern Uganda, to West, even areas of Bundibuja and other regions will support all these innovations. This is what we are working on. Somebody said, I needed to give you a word in the Bible. We should have had a devotion before we start this meeting. In Matthew chapter 25, 14, 30, you are all familiar with the parable of the talent. The talent, there were 3 people. One was given 5 talents, 2 talents, and 1. Remember, the one who was given 1 feared to use. People fear to use some of these products. And those who may be thinking that this talent was 1 shilling, 2 shillings, 5 shillings, please, you are mistaken. In the current value, because each talent, my minister, was equal to, I was looking at the New York Stock Exchange yesterday. The New York Stock Exchange yesterday finished with $33 per ounce of gold. So at that rate, each talent, was equal to 10,000 denaries. A denari in the Bible meant, in the current currency, meant the money we pay a mason when a mason is working on your house, the one who puts on a brick. The money he paid, I think those that we paid about 40,000. So 40,000 times 10,000 was equal to 1 denarii, and the talent was equal to 10,000 of those. So in the current currency, if you calculate the gold of yesterday, a talent was equal to $1.4 million. So that one got 1.4, the 2 got 2.8, the other one got $7 million. And of course, the one who got $1.4 million never used it. These products will not be used unless there is a commitment to use them, and there is a passion to use them, and also creation of awareness. And this is what we are told. And therefore, the onus is on us to make sure that you use them. And also the gospel, many gospels in the Bible. Sorry for boring you a lot with the Bible, those who may not be familiar with the Bible. But the Bible has 31,102 verses. There are in 66 books. And I've read all of them 4 times, including my mother. My mother told for us we are in Kigezi. It's the land of East African revival movement. We are children of the revival movement. So the Bible has 31,102 verses. My minister, out of those verses in the Bible, they are in 66 books. 2,512. You check. You have phones, so let's learn how to use these phones properly. So that they are very, very, very effective. 2,512 verses are on money. They are talking about money. If you add verses that are talking about gold, silver, possessions, somebody stealing money, gold, Solomon who had I don't know how much gold, and so on. And most gold was stolen even from Africa here in Timbuktu, Ethiopia, Uganda, and Nigeria, and so on. It comes to 7,542. The other ones were 2,512. So the whole, you get 2,542 divided by 31,102. The whole, a quarter, 25% of the Bible, of 66 books, is on money, talking about money. So therefore, my honorable minister, we should not accept gospels in the country here. This is a Christian country, which is going to tell people not to work, telling people not to be in economic activity. The Bible itself, a quarter of it, is saying if you don't work, you should not eat. And therefore, please tell people to be in the financial sector, people to participate in economic activity. This is what I wanted to end with. The national climate strategy is very clear on this. It will support that process. And therefore, building trust, we have already said that. And once everybody has that, the regulators will do their work. Especially with the MDS, we have Capital Markets Authority here, we have UMRA, we have everyone. But the financial institutions, fintechs, civil society, and consumer association must work together to protect and empower Uganda, especially to protect our consumers. So ladies and gentlemen, the Uganda financial inclusion journey therefore has always been a very good journey. And in the words of Queen Maxima of the Netherlands, the UN Secretary General, the Ambassador for UN Secretary General on financial inclusion, you have two ambassadors now, the Queen of the Netherlands and yours truly. And for me, I've been speaking for you even without paying me anything. Maybe you can pay. I just declared myself, like I'm a teacher, I declared myself as a teacher of many schools here in Uganda. But for me, I just declare myself as a teacher. I said before these children come to Makerere, I want to come and talk to them. You think if you say before these children in King's College Budo, in Gayaza, sorry, I have children there, that's why I'm bothering those schools. If you say Robina, the teacher Gayaza, I'd like to talk to these girls before they come to Makerere and to educate them on these things. Because these financial markets, financial inclusion, bonds, bills, treasury bills, 5-year bond, 10-year bond, 15-year bond, 20, you go to ask these people don't know anything you are talking about. So if you say, declare, I want everybody here, declare yourself as a teacher. There is no headmaster who will refuse you. Me, I go there, declare myself in the Budo, I start teaching immediately. And the people become very happy. Many people get A in economics and so on. You could tell them something the teacher didn't tell them. So don't remain, what has Professor Nwagaba said here, Honorable Minister, don't remain in your, I don't know, your offices, you are very high. In Makerere, we call it Ivory Tower. Ivory Tower offices, and then think that people will come to you. Make outreaches to them. Explain what these products are. Declare yourself as a teacher by yourself. You don't need appointment. And you'll see how we can financially include these people and Uganda can move forward. So the Queen of Netherlands is saying that financial inclusion, Queen, the Mother Maxima of Netherlands, she's the Queen in Netherlands, and she's the Secretary General Ambassador, Special Advocate for Financial Inclusion. She's saying, just listen, financial inclusion is not an end in itself, but a means to an end, a means to empower people and improve their lives. It is a tool for improving livelihoods. In Professor Nwagaba's words, it is a tool for poverty reduction. And once you do that work, you are doing my work really for poverty reduction. This forum is therefore an opportunity to shape the kind of economy we want, which is the Ugandan economy that is resilient, that is inclusive, that is sustainable, and where every woman, man, and youth can thrive. We have a 10-fold strategy, I'm sure which my minister don't want to preempt his work, but I'm sure he's going to tell you about the 10-fold strategy where we are going to multiply our GDP by 10 times, from 50 billion to 500 billion. Who is going to do that? It is you. How shall we achieve that? It is by bringing everybody in the financial system. And therefore, as I conclude, I urge to all of you to live here, not only with ideas which we have given you and encouragement, but with reviewed conviction. Let's not live with these words which we are tired of speaking. We are really tired of speaking. With conviction, with clarity, with one mind, and with an economic necessity of more imperative, together we can design these solutions. And ladies and gentlemen, I now want to thank everyone who invited us, especially for us from Bank of Uganda. My governor, Michael, he wants very much to be called Michael. But he's Dr. Michael Atingego, but he's very happy when you just call him Michael. So our governor, Michael, is in Washington. He has been attending very many meetings in Washington. He has been on leave. So he requested me to represent the bank. So we are here. So Bank of Uganda, we are very happy. We are supporting you. We are going to support this process. We are willing to support this process to ensure that as many Ugandans as possible, we bring them into the financial system. Our mission in the Bank of Uganda, I don't want to live here without telling you what we do. What we do on our desks, all of us, once we enter 7 o'clock, is to ensure price stability, stable prices of goods and services, and then to have sound financial system. And those two must contribute to socio-economic transformation. That's why the Bank of Uganda is there. That's our mission. Let me repeat it for stable goods and services, prices of goods and services, sound financial system. If those two things are not there, then you know, measure us. You know that we are not doing our work. But you clap for us and then tell you. Just clap for us and then tell you. And I want to thank you very much to be people of faith, to clap for something you don't know. The Bank of Uganda has been rated by Bloomberg among 29 serious African countries, Uganda shilling as the best performing currency. Inflation, number 2 in controlling inflation. We have kept inflation completely subdued. Our target is 5, medium-term target, it is 3.4 now. Completely subdued. Who has made it possible to achieve that? It's really the financial sector. The way you have intermediated all these processes to ensure that money is available, the velocity of money is increasing, changing hands and so on. Nobody's money is stolen. People who have to make national payments are done well and so on. So we have ensured that we achieve our mission. And we are all happy, everybody is happy, the social media is happy. Imagine to be happy within the social media. It's not easy. But the social media is happy with us. I'm very, very happy also as the leader in this process. So we are doing well. Help us to do and continue doing well. So I thank you for listening to me. Thank you.
I told you Professor Augustus Nwagaba is a man of many hats. Marriage counselor, Rotarian. I needed to start with marriage counselor before I forget it. Rotarian, international consultant, gallant intellectual, global economist, among others. Ladies and gentlemen, let us once again join our hands to clap for Professor Augustus Nwagaba for ably representing the Governor, Bank of Uganda. Honorable Minister, the National Payment Systems, which plays a big role as the Secretariat for Financial Inclusion in Uganda at the Bank of Uganda, is headed by Mr. Andrew Kawere, who is the Director, National Payment Systems Department, seated just very close to you. And he's also supported strongly by Mr. Alex Ochan, who has been the head of financial inclusion at the Bank of Uganda for a while, but will be taking on a new tour of duty to move to another department. So at that juncture, I want to recognize Mr. Alex Ochan for his contribution. And Mr. Arnold Bagwaje will be coming in to take on the mantle of financial inclusion. Please allow me to recognize Mr. Arnold Bagwaje. And that team, headed by Andrew, Honorable Minister, has put together a video which documents our financial inclusion journey since it was launched in 2013. And when you count, it's been 2 years now, meaning we are heading into a midterm review, and this video highlights the achievements that have been made thus far. So, Honorable Minister, with your permission, I'll request the DJ to play the video that documents the financial inclusion journey, and as a way of an interlude before we can proceed with the rest of the program. Thank you, Honorable Minister.
Uganda has made significant progress in terms of financial inclusion, and according to the FinScope survey of 2023, 81% of Ugandans are accessing financial services in general. This is quite consistent with the more recent World Bank Findex report, which found that access to formal financial services in Uganda had grown to 73%, up from 68% in 2021. Now, this access to financial services has been significantly on account of mobile money. In fact, the Findex report found that mobile money has contributed up to, I think, 68%. 68% of Ugandans are accessing mobile money. And so it has been a key driver for access to financial services. And so the National Financial Inclusion Strategy will indeed continue to prioritize digital financial services as an avenue to leverage the extension of affordable quality financial services to the population. It was also quite interesting in the Findex to note that almost 71% of the Ugandans have been using digital payments in the past 2 years. Of course, there are certain areas to enhance around that, as I will highlight shortly, but the point is digital financial services have been a key enabler of financial inclusion. And you can tag these achievements alongside the different objectives of the National Financial Inclusion Strategy. Access barriers have been partly broken by the digital avenues, the digital channels. The quality of financial services has been enhanced. Formal financial services, for example, have been extended to the non-traditional collateral arrangements with the support of the Uganda Registration Services Bureau, and this has extended access to the vulnerable populations. There is work around the circles, for example, which has extended financial services to the rural communities, village savings and loan associations, and institutions of the like. If you turn to the other objectives around consumer protection, for example, the recently launched Financial Ombudsman, the National Payment Systems Consumer Protection Regulations, the Digital Financial Literacy Initiative that the Central Bank and its partners are carrying out, as well as the Anti-Fraud Consortium, are among the so many measures that are being taken to extend consumer empowerment, especially to the vulnerable communities. But beyond that, we also have things that have been done around green finance. Minister of Finance is just launched the National Green Taxonomy. We have work done by Abbey Trust. We've got the ESG guidelines that the Central Bank worked on with the banking community, and so many other initiatives. But of course, the last objective is on gender inclusive finance, for which, again, a lot of initiatives have been implemented successfully to empower women. The GROW project is an example, but also the Central Bank's initiatives to empower women through the training of trainer programs. So overall, I can confidently say that we are on track because the 73% of Ugandans who access financial services is just 6% short of the global average, which the World Bank Findex put at 79%. So that is quite commendable. But that said, the Findex also had quite some interesting findings. it was found, for example, that informal financial services are on the rise. Informal lending, for example, far outstrips formal lending. Formal lending from the banking sector, for instance, was put at 11%, down from 19%, while informal lending had gone up from 57% to I think about 68 or 67%. Now, this means that there is a lot more either trust with the informal institutions than the formal institutions. And that is now work that we have to deal with. What is the issue? And the answer is something that I believe the National Financial Inclusion Strategy has already picked up, because one of the objectives is to enhance the quality and improve the access of formal financial services, which is about financial deepening. So as we inch closer to the midterm review of the second National Financial Inclusion Strategy, I think our work has been cut out. We must address the quality of financial services. We must build trust, especially in the form of financial services. And this means dealing with issues around consumer protection. We must deal with issues around timely closure of complaints. We must also address certain other pains, such as the charges which deter especially the vulnerable communities. These are things that I think the NFIS is going to focus on, especially in the second half of the strategy. We need to deal with issues of quality of the financial services, and this is across the entire financial spectrum: capital markets, insurance, retirement benefits and pensions, and of course banking as the primary entry point. We must address the quality so that we claim trust, so that we build trust, and that will take us closer to our financial inclusion targets, which fortunately have been on the rise. Talking of gender inclusive finance, one of the things that we still need to address is the gender gap in terms of access to financial services. The Findex report noted that the gender gap has unfortunately widened from 2% in 2021 to about 14% in 2024. So this means that we must continue prioritizing the initiatives that aim to empower women and give them access to financial services. The same thing was identified for the rural-urban gap. This is from the FinScope survey, which noted that the rural-urban gap is at about 9%, although a significant reduction from 18% as per the FinScope report of 2018. So our work based on these findings, including the finding that informal financial institutions are very popular, especially for the women and youth. These findings mean that our work is kind of cut out. We must continue prioritizing access to formal financial institutions, which offer consumer protection mechanisms. They offer recourse mechanisms for the borrowers and savers. They help them to build a digital footprint that they can later on use to access even more and cheaper financial services. But without a digital footprint in the informal sector, then those are lost opportunities for our people. So consumer protection initiatives, the quality of financial services, rural, urban gap closure are some of the matters that we shall continue to prioritize, especially as we get closer to the midterm evaluation of the strategy. Monitoring and evaluation. We must continue dealing with the monitoring question, because like Peter Drucker put it, what gets measured gets managed. So if we don't have clear measurement criteria, then achieving our objectives will be a little difficult. And in this regard, the central bank has developed a financial inclusion index and an e-payments index to partly support the measurement of impact in terms of how our implementation is quantified. So we're testing those indices, and we hope that they will be able to guide us in terms of impact assessment. There are also several other initiatives that the central bank is taking to deal with those constraints that have already been identified in the past 2 years of implementing the strategy. For example, we are reviewing the innovation framework holistically. We're reviewing the sandbox, arrangement, with a view to being more proactive towards financial innovation. We're also reviewing the e-payment strategy, for which the end-term evaluation is in advanced stages, and we hope that with this second e-payment strategy, we shall continue to leverage the digital financial services to support the national financial inclusion agenda. Other pain points, including the absence of interoperability, which impacts pricing and the affordability of financial services, will also continue to be an area of priority, supported by comprehensive stakeholder consultations. The central bank is working on digital public infrastructure, including the national switch, for which consultations continue. And we hope that these interventions will not only improve efficiency in the financial space, but they will also bring more people into the financial sector. We're also bringing a holistic review of the national payment systems regulatory framework to identify the constraints and support more inclusive digital payments ecosystem as a whole. In a nutshell, I can confidently note that financial inclusion has significantly improved in Uganda. We are on an upward trajectory, but the constraints still remain. Key among those are issues around the quality of the financial services. We have constraints around consumer empowerment. We have challenges around digital financial literacy and digital fraud, which is a key deterrent, especially for the vulnerable communities. These aspects will continue to be areas of priority for the central bank and all its partners. In all these initiatives, stakeholder collaboration will continue to be a major pillar. And indeed, the Financial Inclusion Forum provides an excellent opportunity for us to renew our shared vision, for us to revisit our shared objectives towards the national financial inclusion agenda. Together, we can build an inclusive financial future for all Ugandans. And our commitment as the central bank is to continue working towards universal access to quality, affordable financial services in Uganda in support of socio-economic transformation.
Thank you so much, the team that was behind that video to document the financial inclusion journey in Uganda. Honorable Minister, because of the structural reorganization at the Bank of Uganda, there is a dedicated team headed by the manager, who is none other than Rita Karungi Butime, who is also here with us. So, Honorable Minister, in the best interest of time, I now take this singular honor, pleasure, and privilege to invite you to deliver your speech, after which you'll award certificates and then have a group photo with the participants who are attending this engagement. I invite you, Honorable Minister, to deliver your speech.
The Deputy Governor of Bank of Uganda, representatives of ministries, departments, and agencies, head of financial institutions present here, distinguished guests, ladies and gentlemen, good morning. You know, when you speak, when you're somebody who has more facts and eloquence, you suffer. The Deputy Governor is eloquent on these issues, but I will try as best as I can. It is with a proud sense of purpose that I welcome you to this Financial Inclusion Forum, which is an important structure of a national financial inclusion strategy 23-28. This gathering is not merely a meeting, it is a testament to our shared commitment to weaving financial inclusion into the very fabric of our nation's development. I wish to extend my sincere gratitude to the Bank of Uganda and the Secretariat for coordinating this meeting. The preparatory work from the working groups, the International Committee, and the Steering Committee, which I chair, has laid a formidable foundation for dialogue we embark on today. The theme before us, forum access to usage, advancing inclusive financial product uptake across Uganda, is a strategic and necessary evolution. During the NFIS2, we have commendably broadened the gateways to finance through mainly mobile money, agent banking, and digital platforms. We need to note that a bank account that lies dormant or credit that remains untapped does not fuel growth. True empowerment lies in the active, informed, and sustained usage of financial tools, saving products that build resilience, credit that fuels enterprise, development and growth, insurance that mitigate risk, and investment that secure their future. This is how we translate access into tangible improvements in financial health and household well-being. Significant strides have been made in advancing financial inclusion, and I would like to highlight some key initiatives. 1, wealth creation. The parish development model and the Myoga initiatives continue to drive financial inclusion at the grassroots level. Through the PDM financial inclusion pillar, shillings 3.261 trillion has been disbursed to PDM circles, directly impacting over 3.26 million beneficiaries. Similarly, the Myoga program, through the Microfinance Support Center, has disbursed shillings 308.6 billion for 7,008 circles, benefiting more than 773,000 individuals. Additionally, through the Generating Growth Opportunities and Productivity for Women Entrepreneurs, which is GROW project, Uganda shilling 73.34 billion has been lent out to women-led enterprises. 2, we are also implementing the large-scale farmers financing scheme, the Small Business Recovery Fund, the Agricultural Credit Facility, gradually increasing capitalization of the Uganda Development Bank to ensure that these institutions are able to respond to the needs of Ugandans. 3, the Uganda Agricultural Insurance Scheme continues to register success with over Uganda shillings 40 billion disbursed, benefiting 800,000 800,623 farmers nationwide and ensuring agricultural loans worth Uganda shillings 2.47 trillion. 4, the Capital Markets Authority continue to play a pivotal role in mobilizing alternative financing for both public and private sector investment. Let me repeat this. The Capital Market Authority continue to play a pivotal role in mobilizing alternative financing for both public and private sector investments, providing a critical source of budget financing. We recently launched the new Capital Markets Authority Strategic Plan 25 to 30, which provides a comprehensive roadmap to transform Uganda's capital markets into a more accessible, inclusive, and resilient platform for mobilizing long-term finance. 5, ladies and gentlemen, we are glad that the achievement of removing Uganda from the Financial Action Task Force Grey List has been sustained to date. As a result, Ugandans can now conduct financial transactions without undergoing stringent due diligence. 6, in the banking space, we commenced the rebranding of Post Bank to Pearl Bank as a strategic evolution into one of Uganda's top performing banks, while Pride Bank obtained a Tier 2 banking license, a milestone that enables the bank to mobilize deposits, offer a wide range of credit products, and enhance its competitiveness in the outbreak, particularly to the unserved market segments. 7, to support the development of Uganda's mortgage sector, government enacted the Mortgage Refinancing Institution Act 2022-25, aimed at addressing the loan maturity mismatch in the financial sector, where banks relied on short-term deposits to finance long-term mortgage loans. The Act seeks to establish a framework for mobilizing stable, long-term capital for mortgage refinancing, thereby enabling primary lenders to extend more affordable and longer-term housing loans at lower interest rates, particularly benefiting low and middle-income households. 8, on the microfinance space, the Microfinance Support Center has opened up a new branch in Acholi sub-region, specifically in Gulu, as well as aligning its strategic plan to the NDP4. This is a good step towards promoting access to financial services across the country, in addition to integrating emerging imperatives such as climate finance, Islamic finance, environmental, social, and governance risks, and digital transformation. Regarding SACCO regulation, I note that Bank of Uganda has issued operational licenses to 3 large SACCOs, a critical step towards strengthening regulation and supervision within the sector. Going forward, the bank should ensure that all the SACCOs that fall within their regulatory ambit are effectively regulated and supervised. These initiatives demonstrate our commitment to fostering economic empowerment and financial access across communities. I would like to note that the financial sector is a vital enabler of our 10-fold economic growth strategy. However, we still grapple with challenges such as low savings rates and high credit costs. As set out within the 4th National Development Plan and Vision 2040, we are committed to doubling the level of national savings and increasing the level of formal financial sector inclusion to 100% in year 2040. This requires concerted effort to grow deposits within the banking ecosystem and promote long-term savings in the non-bank sector, including pensions and capital markets. I call upon you in this forum to come up with strong and candid proposals of how our financial sector can contribute to the achievements of a US dollars 500 billion economy by 2040. I will repeat this. This requires concerned efforts to grow deposits within the banking ecosystem and promote long-term savings in the non-bank sector, including pensions and capital markets. I call upon you in this forum to come up with strong and candid proposals of how our financial sector can contribute to the achievement of US dollars 500 billion economy by 2040. I am confident that through continued collaboration and commitment, we will achieve the goals of the National Financial Inclusion Strategy. Our collective efforts will play a critical role in the transforming Uganda's financial sector landscape and supporting the economic growth and prosperity of our nation. Now, it is now my distinguished honor and privilege to officially open the 2025 Financial Inclusion Forum. Thank you. May God bless all us.
A big round of applause for the Minister of Finance, Planning and Economic Development. Honorable Minister, having read your speech, we now request that you officiate at a very important ceremony, which is the certificates awarding ceremony, during which you are going to recognize the chairpersons and co-chairpersons of the different working groups during the first National Financial Inclusion Strategy and the second National Financial Inclusion Strategy. And Honorable Minister, you will officiate together with the Deputy Governor, Professor Augustus Nwagaba. So on that note, I invite you to come forward, guided by Nakasi, so that we can have that ceremony performed, after which we'll have a group photo. Ladies and gentlemen, what is going to happen is the awarding of certificates, and these certificates are going to be awarded to the different chairpersons and co-chairpersons that played a role during the National Financial Inclusion Strategy 1 and the second National Financial Inclusion Strategy. And we'll be reading them in an alphabetical order, and you come forward and receive your certificate. Thank you, Honorable Minister, for accepting to perform that role. We'll start with Patricia Ahumuza. The certificates are going to be awarded in alphabetical order. Patricia Ahumuza is receiving her certificate. Next is Patricia Amito. I told you alphabetical order. While Ibrahim Karle Gava gets ready. Next is Ibrahim Karle Gava from Uganda Institute of Banking and Financial Services. While Badru N. Mayanja gets ready. Badru N. Mayanja, the floor is yours to shake hands with the minister, and that means a lot. You could walk away with some money, you never know. So you better hurry. Michael T. Mbusa. Michael T. Mbusa, followed by Ziana Mudu. Ziana Mudu is going to be followed by Lazarus Mukasa. Lazarus Mukasa is going to be followed by Charlotte Natumanya. And Charlotte Natumanya, Honorable Minister, is our very own from the Ministry of Finance, Planning and Economic Development. Followed by Innocent Kawoya. Innocent Kawoya is going to be followed by Kato Kefa. And Kato Kefa is going to be followed by Patrick Oketayot. And Patrick Oketayot works with the Bank of Uganda. After Patrick Oketayot will have Stella Kakwezi Olimi. Then we'll have Augustine Sechondwa. Augustine Sechondwa will be followed by Dr. George Wilson Sonko. Dr. George Wilson Sonko will be followed by Vincent Tumwijuche. Vincent Tumwijuche, get ready. You're going to receive your certificate. And finally, we'll have Barbara Nabaka Waluyemba. And Honorable Minister, now we are going to have, after awarding certificates, we're going to have a group photo. And the group photo will recognize the members of the steering committee to get ready. Members of the steering committee, please come forward. And on that note, I request the Deputy Governor to also move forward for the group photo. So the photo will feature the Honorable Minister, the Deputy Governor, Bank of Uganda, the steering committee, namely UBRA, IRA, CMA, FIA, NIRA, OPM, Ministry of Gender, Labor and Social Development, UMRA, MRD, that is Microfinance Regulation Department, I'll also request Mr. Alex Ochan together with Mr. Arnold Baguwaje to come and join in for the photo. I also request the Director of Statistics at the Bank of Uganda, Mrs. Millie Nalukwagwisingoma, to come and join in for the photo. The interinstitutional committee should get ready. Lukwago Singoma, the director of statistics, has also joined in. Very good at crunching figures. OPM and means of trade, if you are around, you can join in. Okay, I now invite, okay. Let's now have members of the interinstitutional committee. Members of the interinstitutional committee. If you double in both, please stay there. If you double, Nelson, you need to stay there. Protasio, members of the interinstitutional committee. If you double in both, please stay there. And then the others join in. Different ministries, industry associations. I also request we'll close with that photo of the members of the interinstitutional committee. The secretariat should be the very last actually. Please get close, secretariat and the Minister of Finance, Planning and Economic Development. That is the very last photo, so that we don't keep the Honorable Minister standing for so long. After that photo we'll have the secretariat, that is Bank of Uganda. If you're nearby, please get close. And then together with the Minister of Finance, Planning and Economic Development. That is the very last photo, after which
the team from Ministry of Finance, Sandra, the Commissioner, kindly stay, you are the head.
Bank of Uganda, please get close very fast, together with the Minister of Finance, Planning and Economic Development. This is your moment to take a photo with the Honorable Minister of Finance, Planning and Economic Development, together with the Deputy Governor, Bank of Uganda. Gloria, we can close in. The Secretariat, which is Bank of Uganda, maybe you can close in. This is for the Secretariat, which is Bank of Uganda, together with the Minister of Finance, Planning and Economic Development. Nakasi, thank you so much for organizing us to have a very good photo. Yeah. This is the Bank of Uganda and the Minister of Finance, Planning and Economic Development. Hajara, you need to be in this photo as well. Hajara. Primon, you've forgotten that you work with the Bank of Uganda. Primon, come forward as well. Nicholas Okot, PA to DG, please come forward. DJ, as we honor our Minister Weli Ekizit, we request that you play the anthems in a reverse order. and the minister leaves.
No, let's move to the next. Let's move to the next. No.
Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Thank you so much. We'll now let the Honorable Minister exit and then proceed with the next of the program. And next on the program is a panel discussion on the topic, Designing Inclusive Financial Products for the Unserved and Underserved. The moderator and the panel should get ready, but we'll allow a moment. All right, so the moderator of this particular session is none other than Ms. Rashmi Pillai. Her works span from impact investment, access to finance, and digital payments. So please join me in welcoming Ms. Rashmi Pillai to come forward and take her seat as she gets ready to moderate this panel discussion. Over to you, Rashmi.
Thank you very much. Good morning, everyone. And as I'll take guidance from the Deputy Governor, as he said, all protocols observed. Welcome to the panel on inclusive financial solutions. Before we start, the panelists and I wanted to lay some groundwork so we bring the audience with us on the topic that we're discussing. So in addition to solutions, we're also talking about financial health. So we'll just lay the groundwork by giving you some findings from FinScope. The FinScope is conducted every few years, funded by FSD Uganda, ABI Trust, but it is a BOUN Ministry of Finance product. Okay, so just so that the audience is with us, and if I can manage this. Yes, what do we mean by financial health? In the context of this panel, we will be discussing, you will hear the panelists talking about financial health in terms of 4 factors. So can an individual or small business manage everyday budgets, manage everyday financial needs? Are you able to meet your everyday financial needs? The second is resilience. Are you able to bounce back from a shock? The third is, are you able to plan for your future? And fourth, how confident do you feel as an individual, a small business, or farmer on your own finances? So that's the variable of discussion. Now we want to also talk about, so as the Bank of Uganda Ministry of Finance talked about the amazing progress that we have made on financial inclusion, we have 81% of adults today report having financial access. We also have to weigh that against this paradox. Again, if I can manage to get this. Yes. This is the, I'm sorry, I'm struggling with this. Can't get the remote to move. Okay, so we just wanted to show you a couple of slides from the latest FinScope, which is the proportion of Ugandans that are keeping track of money. The orange is the latest data, the blue is 2018. We're doing incredibly well. People are tracking money, but this is what it tells us. Most Ugandans are not managing their budgets very well. So 70%, 7 out of 10 Ugandans reporting operating on a personal budget deficit, meaning they need more money to manage everyday needs. The second one, I'm not going to go through every single slide. Most Ugandans are now more vulnerable than they were previously to economic shocks. And these can be shocks due to health, death in the family, any shock to your income or theft. And when it comes to planning for the future, 7 out of every 10 Ugandans reported having no concrete long-term financial plans. So when we ask the question of, yes, we have achieved access, yes, we are on the way to achieving usage, the question is financial inclusion for what? Because the idea of financial inclusion is to do two things: build resilience and build a pathway to prosperity. And hopefully that is what the panel will discuss. So this is context. I'm just going to request the tech people to turn this off. We're going back to the panel now. And it's my distinct honor to welcome such an esteemed panel. We'll begin with Mr. Joseph Mugume, the Chief Executive Officer of Igbo Sacco. We're also congratulating Igbo Sacco on becoming a Tier 3 financial institution. You're welcome. He's been with Igbo Sacco for an extremely long time and has championed its leadership. He holds multiple degrees ranging from MBAs to entrepreneurship, financial and project management. It's an entire paragraph, but he's has many degrees, in short. The next is Ms. Helen Chirunji, Senior Manager Bank Tech at MTN Mobile Money. You're welcome. She spearheaded a lot of multiple innovations at MTN beyond just payments. So if you see credit products, insurance products on your MTN app, it's all because of Helen. Mr. Goloba Luanga, someone who I've worked very well with for a long time, Senior Economist at the Ministry of Finance. He has more than 14 years of experience as an economist and has spearheaded a lot of the execution of the parish development model. Mr. Julius Kakito, Pearl Bank, you're welcome, the CEO of Pearl Bank. He's also the current chairman of the Uganda Bankers Association. Okay, thank you. Okay, so we'll begin our first question with, we're beginning with Igbo Sacco. So Joseph, we've heard us talk about the paradox. We have very high financial inclusion, but not enough financial health. The resilience and prosperity that we're discussing is still a journey that we're on. So you as Igbo Sacco have close to directly, you're supporting 220,000 last mile customers, if I may say that. Question A, what is your view on the financial health versus financial inclusion paradox? What should we be doing more to build the financial health of customers such as the ones you serve and help them go up the economic ladder?
Thank you so much for that question. As you have heard, I'm Joseph Mugume from Igbo Sacco. And Igbo Sacco is actually a financial cooperative based in Western Uganda and largely dealing with smallholder farmers who are excluded from the commercial banks, and majorly women, youth, refugees, and the rest. So the question, these clients as we serve, most of them, they have been excluded from commercial banks. But also, this very sector, they have also financial needs like any other person, like any other human being. So what we do at EBO, what we have done is that how can we bring them on board into financial economy? And we do this through several ways. One of them is that we go and the extra mile, include them, and make sure that we make products which are tailored to their needs. And first thing that we do, of course, is look at the pain points and making them their customer-centric products, which are tailored to their needs, especially. And this one, of course, talks much. If you are to deal with these clients, you need to look at the pain points. What type of products are they fit for their needs? Then once you know their customer journey, the pain points, you put them at the heart of everything. And then you'll be able to come up with proper products which are tailored to their needs, and really talk to their needs, and you can actually satisfy them very well. Thank you so much.
Joseph, you'll forgive me for pushing back a little bit on, so how do we for the audience, a bulk of your clients are smallholder farmers. They are in agriculture.
Yes.
What are the kinds of products that you would advise? Because we are talking about different kinds of financial institutions. When it comes to farmers, what kind of agriculture finance products or weather index products should we be thinking about? You talked about something very pertinent, which is pain points and user journey. So can you give us an example of how you have incorporated that in product design?
Yes, I have incorporated this into product design that really, before we do anything, we have to involve them, involve customers, know their needs. And then you come up with a product that actually speaks to their needs. Not just a prototype, which you just bring from the off-shelf and then we give out. So we involve them, know their expectations, know their pain points, so that these products can actually solve most of the issues that concern them. And this one, I have a very, very good relevant examples, because majorly in rural areas, there are no commercial banks. And the circles are majorly predominant in rural areas. Formerly, agriculture was actually taken as something that was not profitable, but we have been able to do this for the last 25 years. And most of the products are tailored about agriculture, crop farming, and dairy farming. And we have served them very well, and really, they have also improved their lives and also welfare, income, and food security at household level.
Thank you very much, Joseph. Helen, we move to you. A lot of the progress that we have made is, when we talk about formal financial inclusion, is thanks to mobile money. A lot of mobile money operators, including yourself, now say that you want to be a platform business, meaning you want to have partnerships with others just the way that you're doing to become a channel of distribution of credit, insurance, savings, etc. So how is MTN thinking about its role in inclusive finance, especially financial sector depth? Because payments is just one of the instruments that people need, but it doesn't give financial sector depth. So how is MTN thinking about the role of inclusive finance that help people build resilience and prosperity?
Thank you. Thank you, Rashmi. When I look at MTN and Momo as a platform, so it just goes beyond payments, because payments is just a foundation. When you think about financial inclusion and resilience, you're also thinking about impact, and that's what Momo is doing. One of the things and what we see ourselves as the rails, when you look at access, being able to give access to credit, access to insurance, access to investment, to even the last mile customer. Think about it where a customer has no smartphone, but they still are able to get credit via USSD. You're looking at a vast network of agents reaching the last mile customer. you're thinking about usage, like the CEO Ebo Sako mentioned that you sometimes create prototypes, but what does the customer need? Being able to create products that are actually usable by these customers and hence creating inclusion. When you think about the role that Momo is playing, is being able to create products that actually speak to the needs of these customers. Think about Momo Advance. When you think about our credit portfolio, we have a loan marketplace where we give advance through Momo Advance, more cash in partnership with NCBA, Momo Advance in partnership with Pearl Bank. I'm happy to have one of our stakeholders on the panel. So, and for us, that's the role that Momo is doing out there. And when it comes to resilience, and sometimes in life you think about the small things that actually matter. Being able to give someone credit, but they walk away with their dignity without having to mention your problems out there for everyone to know that you're actually in need of that small loan and you're able to manage your finances. But over and above, we also into the business of value creation. Are our products actually creating value to the community? When I think about, for example, our school fees loan, where we are able to keep students in school, and that's where the impact really comes in, where Momo plays. When we think of building resilience, we also have an insurance product covered by Momo, where you're able to insure your life through just your phone. All you need is a phone. When I think about the investor, one of our unit trust products, where you're able to save for that day when you really need that money and invest. So it's all these put together. In a nutshell, being able to keep customers and people continue to have their dignity through the products that we provide, but also creating an impact in the community. Yeah.
Thank you, Helen. Two questions there. It would be helpful to hear a little bit more about both your own and the partnerships that you lead, credit, savings, microinsurance, et cetera, that you spoke about. What are the discussions around a couple of points? Accessibility, affordability. Do you also collect sex disaggregated data to know whether there's uptake of women versus men, et cetera? There are some products that see a disproportionate uptake from men, which is fine, but we also we have a focus on all adults. And the last question I have is on agent management at the last mile. So questions around product design, pricing, and then agent management at the last mile.
Okay, thanks. Thank you. So when I think about the product design and being able to, and the customers that we serve, the data that we see on our side is that there's a 43% split in terms of access to credit, and the 47 skewed to male and the 43% to female. When you look at what we do, when someone makes a payment, that payment is just not a transaction, and that's how we see it at Momo. Every payment that you make, you create a digital financial footprint, not just for you as a customer that makes the payment, but also to the merchant or to the smallholder business that sticks as a digital financial imprint that gives digital financial identity to most of the underserved customers. And that's why we see us play in being able to reach the last mile. Because when you have this digital footprint, at the back end, what it means to us is we are able to track your financial history. we are able to accord you a loan, a credit, without having to ask for a land title or your car, with no collateral. But what we see a lot is that as Momo, we cannot do it on ourselves. And we're not trying to do everything by ourselves. It's intentional that we work with partners. Most of our partners are accredited institutions, licensed by Bank of Uganda, by Capital Markets Authority, by UMRA. So it's being able to connect loan credit to the customers. And when you think about the vast agent network that we have around the country, we are able to also continue to service that customer and to service many people out there, because when you think about the liquidity gap that we have and the liquidity cycles, you're able to reach that agent. When you think about, for example, our loans to the agents, we've partnered with DFCU, we've partnered with Lechego to be able to give loans to some of our agents to be able to service most of these customers. So that's how I see us play up to the last mile. Yeah.
Thank you. I see that you avoided the pricing question, but no, I'm joking. But do you want to respond? But it's fine if you.
No, it's fine. So in terms of pricing, like I said, we are regulated by the Bank of Uganda. There is no product that we take to the market that has not been approved from the pricing. And when you look at access to credit, if you think about the time that customers had to make queues in the banks just to pay school fees, for example, time is money. But we afford that to the customer through the phone at a very small price. So you will find that most of the loan products pricing doesn't go even above 15% per annum. So, yeah.
Thank you. Thanks, Helen. Julius, we're moving on to you. So you've transformed Post Bank into Pearl Bank. Fostering prosperity is your slogan. And you support a lot of government programs, naturally, including the credit facility, PDM, etc. So can you talk about designing products? How are you as a bank thinking of designing products, especially for women, small businesses, and farmers? And these are typically groups that don't have immovable assets. So how are you designing products for them?
Thank you, Rashmi. As you've correctly stated, we have to live its purpose, fostering prosperity for Ugandans. You cannot achieve that purpose if you don't dive into what you'd call micro, small, and medium-sized enterprises and agriculture space, because that's what the majority of Ugandans do. That is the largest source of employment for Ugandans. So the only way you can support Ugandans is to be in that space. Today, our loan book is 28% youth and women. It is something we track, but you have to be very deliberate if you want to succeed in this space. You don't start off with the products, the solutions that you think will work. You have to go on the ground and actually identify the businesses in those communities and understand their cash flow patterns, and then you come back and you design solutions that will actually help them succeed and not fail. There are some observations around this space which certain things wouldn't work. First and foremost, there must be access. Good enough, today we have so many options in terms of access, including the telcos. We have Wendy, and plus the branches, which is the traditional way of enabling access. But branches today are very limiting. It's a very expensive way to reach out to customers, the brick and mortar style of access. So you must embrace technology. Onboarding process must be very simplified. It must be very simple for you to open an account, to come into the bank or to get onto Wendy. All you need is a national ID. You don't need all those papers to fill in. And on the side of the bank, we have a Zero Flex account, which is purely digital, mainly for the youth. It has no charges for the youth to onboard, and because they would prefer to transact digitally. So that is an option for them as well. When it comes to lending, most of the facilities in this space are cash flow based. And you, as a bank, you must be very flexible to extend credit without the traditional of lending where you have monthly installments and so on. For example, if it is agriculture, you must be ready to extend credit, and repayments are based on the harvest cycles around agriculture. Then security is always a problem for this group, so you must be able to take some form of risk. What you do, or what we have done as PAL Bank, we seek partnerships. We have a partnership with government of Uganda, with Bank of Uganda, the Agriculture Credit Facility, where they take away 50% of the risk and provide 50% of the liquidity. We've just recently announced a partnership with the French Development Agency, AFD, again, lending in that space, youth, women, and agriculture. These partnerships actually help to de-risk and give us the confidence to enter that space. We also leverage a lot on an ecosystem. Usually you'll find an established customer. It could be a factory, a manufacturer, it could be a distributor, but has this ecosystem of suppliers in the agriculture space. And that provides a lot of de-risking, because once you tailor something, a solution around this main customer who is established, then it's very easy to extend credit, because all these farmers and traders have an outlet where they will send their final produce. And of course, I've talked about flexibility and repayments. That's also very, very important. So those are some of the solutions we have. There's no one size fits all. You must be ready as an institution to be flexible, go on the ground, and also do a lot of financial literacy.
Thank you, Julius. Now, I'm really glad you mentioned risk. So you have a lot of agricultural dependent customers or clients, if I may say that. Agri-allied services or directly smallholder farmers. How are you as a bank, and maybe by extension because you're the chairperson of UBA, thinking about climate risks and climate vulnerability of the smallholder farmers that you're serving?
Yeah, there is a lot of, there's a lot of risk. Before I narrow down to climate risk, there is a lot of risk around lack of credit history, high levels of unemployment for the youth, lack of formal security. In Uganda, we have a very poor address system. Many of us would struggle in one sentence to direct someone where we live or where to find us. You need a full paragraph. And of course, there is lack of trust with the financial institutions, especially if someone is very new, a new borrower to the system. And of course, now the other one you brought in, which is climate risk. Seasons are changing, weather patterns are changing. A lot of agriculture, especially the smallholder farmers, they are still relying on the traditional forms of agriculture. No irrigation, you know the rain cycles, you pray for the rains, you don't really use a lot of fertilizers, and so on and so forth. So your yield could be impacted. And what the industry is doing today, it has moved on to a journey of sustainability. That journey started with help with partners like Abi Finance. They sponsored an ESG framework to help the individual banks actually move on to a sustainability journey. Some of the banks have moved ahead. I'll gladly say PAL Bank has already achieved sustainability. And the whole idea is you have to integrate a lot of the risk mitigants into the way you do business. It is not a project on the side that I'll help plant 10 trees. I'll help finance one customer and I make headlines. That is really greenwashing. It is not real sustainability. True sustainability, you have to integrate a lot of these risk mitigants in your strategy. And that's what we've done as Pearl Bank. We are big on financing farmers who have adopted green financing, green methods of farming. We are shying away from manufacturers who are moving in the opposite direction in terms of, should I say, degreening the earth or the system. So we believe, what we truly believe in is all institutions need to integrate sustainability in their operating models so that it's part of their strategy. It's not something on the side. It is what you do. You support even agriculture in terms of helping farmers navigate this challenge.
Thank you, Julius. Goloba, we're moving to you now. You have the honor of working actually at the subsistence economy level. You've helped, via the PDM, help multiple households come out of poverty. What has worked for PDM and what has not worked? Because hindsight is always 20/20. So what has worked, what has not worked?
Okay, thank you, Rashmi. Happy to see you again. And good morning, ladies and gentlemen. So PDM was launched by His Excellency the President in 2022, February, and we have been implementing it in a phased manner. The first 2 years, we had what we call establishment, which I think at the beginning there was a lot of information around that, trying to create an infrastructure, trying to create a financial infrastructure at each and every parish in this country. As we speak, we have at least an agent now, a financial agent, in the form of a PDM circle at each of the 10,594 parishes in the country. I think that is something that is a significant achievement that we've been able to register. But away from that phase, we had a phase. That phase ran for around 2 years. The first 2 years, we had basically establishing the whole ecosystem, the people who support this whole program at the parish level, at the different levels of government, data, collecting data, baseline data, and that ran for around 2 years. Then we moved to another phase we called sustainability, where we changed, the focus now changed. Focus changed to things such as the systems, what systems are we using? Things changed to issues such as governance, how do we run the infrastructure that we've created at each and every parish, mindset, the business mindset, what these people that are getting the money, what exactly are they doing the money, what are they using the money for? And that's where the focus was in this next 2 years. Then now, we've just started a phase we call acceleration and sustainability phase. So that's at the moment, that is where the PDM is. And if you say what has worked, I think one thing that I want to say here is, and we are very excited about that one, is we have been able to achieve full digitization under the PDM. So I'll explain what full digitization, what I mean by full digitization. So I mentioned that we have been able to establish PDM circles at each and every parish in this country. The circles established at 10,000, okay, the actual figure is 10,589. So for all of those circles, they are transacting business on digital platforms, all of them. Right now, under the PDM, we have a system called the PDMIS, the Parish Development Management Information System, and that is the system we use to profile our beneficiaries and also ensure eligible beneficiaries are getting the money. We have another system, the Wendy, powered by Pearl Bank, which is helping us ensure that we securely have this money moved from the circles to the beneficiaries' mobile phones. Then we also have another system called Zaidi. Zaidi is a system we're using to track funds at the beneficiary level. So who got what, how are they using it, and that type of thing. So we've been able to roll out these systems and cover all of the parishes in this country. I think that's a significant achievement that this country has registered that is working well. Government has also provided hardware to support these systems. So in the beginning of this year, government provided around 23,000 gadgets across the country. Those gadgets were going to implementers of PDM at the district level, but also to the parish level. So at the parish, a gadget was provided to this circle, and by a gadget I mean a tablet, to the PDM circle and to the parish chief. So for all the parishes in this country, we have at least 2 gadgets that are being used to run these systems. Now for the hard to reach parishes, we actually have more than 2. We have at least 3. Last month, UCC provided an additional gadgets, solar panels, and data as well, particularly targeting the hard to reach. I mean, hard to reach, I'm talking about parishes in islands, places like Karamoja, and that type of thing. So that's what I mean by full digitization. So that, I think, for us is something we're very proud of. The other thing that has worked well is we've been able to achieve scale. So at the beginning, of course, for the client that we're targeting, and this client we're targeting, I want you to imagine someone who is not being served by my brother from Ebo, because he will ask you for membership fees, for savings before you start enjoying the service. So I want you to envisage that type of client is not being served by Ebo, is not being served by MDIs, is not being, he or she is not being served by commercial banks, not being served by development banks, is not being served by equity investors, say. Now, in Uganda, that's what we keep calling the subsistence household. So that's my client. And in Uganda, if you go by the national population, the census that they've done in 2024, we're talking about 14.7 million people. So those are the guys we're going out of our way to serve. That person is probably landless, it doesn't have much income, and is very vulnerable to shocks. So that's the type of client that we go out of our way to try and serve and bring on board. So there are certain things we've, of course, had to design within the whole program to try and reach that person and ensure that that person is attracted to join the PDM circle. Now, we have a significant amount of people that have been able to join the PDM circles, and the government has provided seed capital to these circles, these PDM circles. So I think, as you heard from my Honorable Minister's remarks, government has transferred 3.261 trillion shillings to those circles, directly to the accounts of those circles, from Treasury, direct to the account of those circles. And those circles have then lent that money to the client I've been describing to you. So far they've lent around 3.219 trillion to around 3.262 million beneficiaries. So that's out of the 14 million I talked about earlier. And they're lending this money to them at 6% per annum. So that's the price. So for us, the scale that we've been able to achieve in this period is something that we are very glad about. And government is providing that seed capital still at this moment. And every year we are onboarding 1 million new beneficiaries of the category I explained to you earlier. under the PDM. So that's also something we are excited about. And another thing that has worked well for us is something that my brother, Mr. Kaketo, powers, Wendy. The Wendy mobile wallet. So at the beginning of PDM, we were going with the bank account. So, you know, under financial inclusion, we always talk about the account and how many people are using the account and accessing. So we had challenges, significant challenges. In this country, there are places where that outreach is very limited for banking services. And I think I'll give you an example. In Uganda, there are sub-regions. There's maybe 3 sub-regions in the east. There's around 20 districts forming those sub-regions of Sebei, Bukedi, and Bugisu. Now, the people in all those sub-regions converge on Mbale to access banking services. Only in Mbale, for some reason. All of them converge on Mbale to access banking services. So when we started the PDM and we said, please open up bank accounts and you'll be able to receive your money on your bank account, you can imagine what happened in Mbale. I have pictures, but of course now I cannot show you. But chaos happened in Mbale. People would be mobilized to go and open bank accounts and then later come back at another date to access the money when it hits the bank account. Serious pain, by the way, for the client that we're trying to serve. But when we had engagements with the government banks, led by Pearl Bank, we were able to come up with this Wendy mobile wallet, which has significantly helped us solve some of these problems that we were facing in the beginning. So in the beginning, we were looking at the bank account. Right now, this phone for our PDM beneficiaries became a bank. It's not even just an account. The bank moved to the phone. So under the PDM, and we're very happy about that, we've been able to move that bank to the people within their communities. That's where they're transacting. And now this brings me maybe to the last point on what has worked for us, which my colleague from Momo was talking about, the footprint. And people are very excited about the money, but there's something they all miss. With all of this, everything that we put in place, everything that is happening with this money, there is something that is happening that people don't realize. These people have been talking about, the client have been talking about, who was in the subsistence economy, was virtually blind to the formal economy. When they get on board and they're using the systems we put in place, all of a sudden we have a digital identity for this person. With the bank accounts, many of these people would get the money. Once they get the money, the account goes dormant. But what we're seeing with the Wendy wallets that they are using, when they get the money, they're using them for just more than just receiving the PDM money. They're transacting actually on those wallets. They're creating a digital identity for themselves on these systems. And as she said, at a certain point, you will not need these traditional collateral systems and a lot of the other hassle for them to benefit from even more complicated financial services. And for us, that is something that has worked, that we see is growing, is something that we look forward to, and we want to encourage all of you to try and support this as well. So at least for what has worked, that has worked for us. What has not worked so well, and I think Governor was talking about, I think what he was talking about, part of it is your financial literacy. We still have a bit of gaps there, and the Ugandan population, a lot of people borrow money with the intention not to pay back. We're all Ugandans, you know what is in our communities, and you all come from a parish somewhere, and you all have family, and you also borrow, incidentally. We have people who have borrowed from UDB, and there's a problem paying back. So you can imagine that level of sophistication, but there is that behavior. So we have that under PDM as well. We've seen diversion, and of course that is now the financial literacy that we need. But we also have another thing that has not worked well is now the digital literacy. So as I've mentioned, we have all these systems, we have the hardware, but yes, the literacy, the digital literacy. Governor talked about Somalia running everything on the phone. I'm very curious how they achieved it, even for the beggar. We need to learn from them, because in our own experience under the PDM, because of the changes that we introduced in a very fast manner, we've had instances where our beneficiaries have had to depend on other people to support them to run the systems, support them to use the gadgets. And in some instances, we've had cases of, some few cases of identity theft. But those are things we're dealing with because they have emerged because of the digital literacy gap that we have. Some are giving away their PIN codes, their past PIN code, you can imagine. And I told you, now our bank is here. So you can imagine what is happening. We also have...
Sorry, Golova, we are being told that we are running...
Okay, fantastic. But that is what has worked well and not worked well for us. Thank you.
Sorry, can someone tell us how much time we have left? Okay, I'm receiving notes, so somebody is keeping track. Okay, we don't seem to have enough time, so I'm going to just ask for concluding remarks. And Julius, we'll begin with you. 3 things that you think are necessary, that we as the entire financial sector, donors, private sector, public sector combined, should in the next couple of years look at when we talk about financial health for people and businesses. What are the 3 or 5 things that you think are important?
In my view, financial access is one thing and health is a journey. That takes some time. It is not like Mr. Golova has been talking about PDM and its impact. It will take a while for that to bed in and for people to grow in terms of financial awareness, appreciation, business, and so on. So there are 3 things I can think of. One is collaboration. It's not always about competition, and this is happening a lot today. You're seeing a lot of organizations coming to work together to solve a problem. The key actors must be willing to collaborate towards a common goal, especially for the benefit of the population. Secondly is technology. Financial access and financial health is only going to be achieved through technology. With technology, you can reach anyone, you can reach everywhere. We need to focus a lot on around technology and data, leverage data to make so many meaningful decisions around financial access. 3, we need to start thinking of non-traditional forms of financing. Now this is for the banks. If we are to achieve the 10-fold growth strategy, and the industry has developed a response around that, we are in discussion with the governor. When he returns, I think it will be progressed. As banks, we need to seek non-traditional forms of funding our balance sheets and supporting customers. I think that those are the top 3 in a nutshell that I can summarize with.
Thank you, Julius. Well said. Golova?
Okay, thank you, Rashmi. So the 3 that I can think of, one is what Mr. Kawere talked about in his video, interoperability and integration. I think I cannot emphasize enough what we need, what we will benefit out of shared digital infrastructure. We have issues with networks across the country. We have issues with pricing with these systems. But I think the client we want to serve, and also for us, the service providers, I envisage we will benefit more if we have shared digital infrastructure. We've seen some, just take the example, let's say Wendy, I'll just use that one because I'm more familiar with it. We've seen some more partners joining Wendy, the Wendy wallet, and we want to encourage it because it's giving us significant progress. We want to move to things such as open banking. Why should I be stuck to bank X or Y? Other people are doing that. They're enjoying the benefit of that. Why not here? But the sooner we get to the shared digital infrastructure, the better for all of us, both the providers and the clients we want to serve. The other is, and this is something I think the other colleagues in the Banking Institute, things around the financial literacy and digital financial literacy. That is something, at least from where I sit, something we can work a bit better on than we have done in the past. There is a significant need in the population to appreciate exactly what can come out of the funds they've been able to receive, the financial services that are on the market. There's a lot that I think we can do. Then finally is on, I would say, value chain development. So for us, under the PDM, these funds we're providing, as the governor was quoting the Queen, financial inclusion is not an end in itself. We are targeting them to use or invest these funds in agricultural value chains. Selected agricultural value chains. We're not promoting all the agricultural value chains, but there is a set of them that we're promoting under the PDM. So for us to have these funds revolve and have these incomes grow, we need the value chains to work exactly how they should. So we still have gaps in some of the value chains. Coffee is really developed, but if now you go, so for the PDM, when you look at where the funds have gone, our number one is piggery. That's why Ugandans have elected to put the majority of PDM funds. Number two is coffee, number three is poultry. But if you look at piggery value chain and say let's say poultry, we still have a bit of work to do. So this is something I think the private sector can also come in, so that we work together to improve these value chains. Thank you very much.
Thank you. Joseph.
Yeah, thank you so much. I will not divert so much from my colleagues, but first of all, you have to digitalize your processes, your products and services. If you don't digitalize, definitely you'll be, of course, pushed away from the market. That's the way to go, and the technology is the one actually enabling business. So that's very, very key as we think of financial inclusion. And even digitalization, by the way, it also helps ESG principles, because once you digitalize, then you are somehow reducing some of these effects that affect the environment. So that's number one. Number two, we must come up with the products which are talking to renewable energy. For instance, irrigation, those of course of climate change, you know, you can't depend on the weather. We have now to adapt to irrigation. Then definitely also have to look at solar. How do you use solar energy to be productive? Also is very, very key. But also as a way of improving this one, we have to have partnerships. We can't do it alone, we need partners. For instance, if you talk of now funding women and youth, these are products which are talking to their needs, but also sometimes they are highly subsidized. So you need to partner with government, partner with other NGOs, like-minded partners that can come in place so that we can serve these clients better. That is very, very key, and I think once we do that, then we shall be able to extend financial inclusion to our people. Thank you so much.
Thank you, Joseph. Helen?
Yeah, thank you. When I think about it, it's partnerships. Like I mentioned, Momo can't do it alone, and it has no intention to do everything. We last year disbursed about 1.4 trillion in loans just off the phone. We've surpassed that number in this year. And when I think about how many customers we are serving, over 3.3 million customers every month are taking a loan. We are not able to do that without our partners. We partner with the banks. The banks bring the balance sheet and the underwriting. They're able to disburse to all these customers. When I think about the over 13 million customers that are on Momo, 11 million already are credit worthy and are able to get a loan. So financial inclusion is just not even the numbers, it's about the impact. Secondly, it's access. Being able to give access to many, like fintechs, being able to come to and integrate to our networks, all the aggregators via open API and build massive products that are able to meet the needs of the customer. The fintechs come with a lot of power in innovation. So yeah, we welcome all those on board to be able to serve all customers out there. And lastly, I would think about is distribution. Digital distribution, it could be just physical distribution, the agent network, the vast network and technology. MTN Momo provides the rails, the distribution, and the access to data to be able to do all this. Yeah, thank you.
Thank you. Thank you to each of my panelists for the grace and patience to answer all the questions. Do we have time for Q&A, or have we eaten into that?
I will ask those who are willing to put forward their questions to put up their hands. I'll have 1, 2, 3. So we'll deal with it. Okay, there's another one there. All right, so we'll just, let's begin from over there. Just unmute your microphone and ask your question.
Thank you very much.
Please introduce yourself,
yes.
Where your name, where you're from, and the question who you're directing it to.
Absolutely.
Okay, thank you very much. My name is Dr. Colin Agabalinda. I work for the Africa Rural Climate Adaptation Finance Mechanism of the International IFAD, of International Fund for Agricultural Development. But I also have a leg in academia at Makerere University Business School, where I teach in the Department of Finance, and I'm a research fellow at the Climate Finance and Sustainability Center. Thank you very much, panelists. And I think Rashmi started us off by saying financial inclusion aims, 1, to build resilience, and 2, as a pathway for prosperity. So we look at financial inclusion as many things, not just one. And that is why the deputy director said that when you are a neighbor of Gayaza, it does not mean that you have education from Gayaza. So similarly, I think even when you have just a bank account, it does not mean that you have built resilience or you have made it to prosperity. So my question specifically goes to Mr. Golova Luanga, because the PDM he presented is big in terms of scale. And I can see from what he's said, the figures he's given, there's just one aspect of inclusion, which is credit. So my question is, are there ways in the PDM that you are doing anything else, either to support or in addition to credit? Because the 14 million people you said, I don't think you can move them from financial oblivion to financial inclusion just by credit. So they will come from oblivion to credit. So I don't know whether there are any other support mechanisms around the PDM to help these people you're targeting build resilience. Thank you very much.
Thank you so much. Next question.
Thank you. It's not a question, maybe a supplement. My name is Musa Lukwago, Principal Economist, Minister of Finance. One of the issues raised by Pearl Bank, my friend Mr. Kaketa, and Able Bank, they deal with farmers, mostly small-scale farmers. The challenges they face are related with climate change. If you saw climate change, droughts, hailstorm, pests and diseases. However, we have a solution in government. We have a scheme called Uganda Agriculture Insurance Scheme. It provides premium subsidies to the farmers. We de-risk the sector. And by so doing, we are seeing that financial institutions are now so much willing to lend the insured farmers. The reports indicate that over 1 million farmers have been provided with agricultural insurance. And we believe if we go that way and we partner with you, SACCO and maybe Power Bank and other financial institutions can be able to de-risk the financial sector. I submit.
Thank you. Okay. Over there, then the last. Just unmute that microphone and mention your name. Go straight to the question because time is not our best ally.
Yeah, thank you. My name is Vincent. I'm CEO Future Link Technologies, but also board chairman for the Financial Technology Providers Association. My question goes to my good friend Golova. In managing financial resilience, have we thought about access to markets? I don't know whether you've seen a young man at Kalerwe carrying 4 big pineapples going for 10,000 shillings. And sometimes I just sit down and wonder, how do these 4 big pineapples get to Kalerwe? Transportation, harvesting, planting, reducing that big pineapple to 2,500. How will this farmer with great produce ever come out of poverty? And yet the same pineapples go for a kill in other markets, Europe, and you'll not even get anything. You eat something called a pineapple and you just can't believe it's a pineapple. I think if we are talking about financial resilience, we must be able to speak about the capacity of the people to participate in the financial system. And unless we speak about democratized access to equitable equitable markets, we are just doing mere talk. I would really love to hear about the interventions that have gone on, the banana producers, for example, because when there is great produce, there is barely no market. And when there is scarcity, they are faced with barriers to production. Irrigation, they cannot do that. How are we really going to lift these people out of poverty?
Thank you. From pineapples at Kalere to bananas and irrigation. So your question has been picked. Let's have the very last physical one, and then I'll read out the one online for this session.
Thank you so much. I'm Rachel Vanessa Mwezi from Ministry of Finance Planning and Economic Development, the former Uganda Microfinance Regulatory Authority Department. That's where I serve. My question would go to 2 people, the MD, Pearl Bank now. Of recent, we have seen an integration or interoperability between FlexPay of Stanbic Bank and Wendy Wallet. What are we expecting as Ugandans to benefit from the integration between the FlexPay and Wendy Wallet and its deeper contribution to financial inclusion? And my next question would go to Mr. Golova. We have talked about the disbursements, the 23,000 gadgets that were distributed to the parishes, and also we really appreciate that government is using disbursements through Wendy Wallet or these gadgets at the parish level. But we also need to think about the penetration of mobile phones in Uganda is at only 36% within the sector. What do we think about the 14 million people? Do they have access to future phones that if at the parish level they receive the disbursements from government, the parish leadership is also able to disburse to the final beneficiary on their future fund, other than receiving money at the leadership of the circle, but the impact to the last mile person. Do they own funds? Since they cannot even own land, they don't have any form of maybe SME. Are we sure that the money is really reaching these people, or it is remaining in the leadership of the parish level? Thank you.
Thank you. Very lastly, physical question here, then we go to
online. Thanks for the opportunity. My name is Busura Bernard, and write for the Servants paper. So, one question to Mr. Kaketo. So, you said 28% of your loan book goes to women and youth borrowers. The question is, what's the average interest rate margin that you book from those loans? What's the average NPA ratio to book from those loans? What's the average loan disbursement to that group per month? And what's the cost of providing those loans at the alternative level as a bank? For instance, if you are lending someone 1 million shillings and it's a woman in Chiboga, how much does it cost to disburse that loan, for starters? And then to Mr. Luanga, the issue about funds being so cheap in Somalia is down to three things. That one, the revenue authority in Somalia is too soft to handle coastal trade, so people are able to import almost everything and pay very little tax. So as a result, you can import smartphones into Somalia, and you'll be able to sell an iPhone at less than 5 million shillings because there's little or no tax on it. So that's how a phone becomes cheaper for a beggar in Somalia to own. Anyone in the UPDF will tell you that. Thank you.
And very lastly, Rashmi, from our online participants, this has been picked from LinkedIn by John Katelera. The question is, ask commercial banks to make it easy for us to access agricultural credit facility. And since you have the CEO of Pearl Bank on your panel, Mr. Kaketo, I'm sure he will answer that. Over to you.
Okay. Thank you very much. Goloba, you're very popular today. So maybe you want to take your set of questions, and then Julius, we go to you.
Okay. Thank you very much, Rashmi and colleagues, for the questions. The experience of Somalia is very interesting. They have a weak revenue authority. That one, I don't know. Here, implementing it here will be a problem, but that was just a joke. Okay, so the questions around, so Dr. Collins asked around the other financial services, particularly to support the resilience of our people. I mentioned that the way we have been implementing the PDM is in a phased approach. So the reason I said, the reason it is phased is because in each phase, we focus on different things or different activities. We prioritize some over others. So in the establishment, we prioritized things other than, for example, savings or insurance. Now, in the phase where we're at, and I said we're now at a phase called acceleration and sustainability phase. We are actually prioritizing those. So we use the credit to get these people in, but once they're in, we are now prioritizing those other services. So right now, our shining example is in Mubende. I don't know if there's someone here from Mubende. Okay, is anyone from Mubende? Okay. But right now, our shining example for savings is in Mubende. So we've had some pilots run to see how this plays out and to ensure that people's money is safe before we go full blast. But we are now at that phase where we are now thinking or promoting or working around the other financial services that we can offer to our client under the PDM circle. There's also insurance, and Musa has talked about the Uganda Agricultural Insurance Scheme, which is going for the whole country. It's available for everyone. But I described the client we have. So for him or her, the pricing might have to be different. There are things or discussions that have been happening, and right now we are at the level where Cabinet has to make a decision of what exactly our insurance product should look like under the PDM. Because for us, as I told you, our client, we're extremely sensitive to the price. But yes, as I've said, we're in the phase where we're now prioritizing those types of other services to come on board. Same goes for the question around the pineapples. And if you remember, I said government has an extension structure and has programs that we're running under the Ministry of Agriculture and other agencies and Ministry of Trade. But we think we can partner more with the private sector and all of you to improve the value chains. And by value chain, I'm not just talking about production. I'm talking about the inputs, because we have a lot of our beneficiaries that got this money. Maybe let me use the example of the very first beneficiary, PDM beneficiary in Uganda, is a lady called Knight. She's from Kayunga district. I want you to look her up. So Knight got the money and invested in poultry. She was the very first beneficiary. So of course you can imagine Knight must succeed. At least for us, where we sit, Knight must succeed. So Knight invested in poultry. Along the way, she was advised how chickens needed, I don't know if it's called immunization, something like that. Vaccination, yes, that's the word. And she was advised on where to get the drugs. And the drugs were fake. And she lost birds. So we have issues around things like fake inputs on the market. We have issues, of course, yes, around the production, the skill, good agricultural practices. This person we've pulled into this whole program, do they know how to exactly look after a pig if they've decided to invest in piggery? But we also have issues around the extension, issues around processing, be it primary, be it secondary. So that's why I said we need help or your partnership on the value chains, particularly on some more than others. I think that is something that we need to do better at. But as I've said, in the current phase, that is also something we're focusing on a bit more, and you'll be hearing more talk about that more than the disbursement. But you're hearing the disbursement because of it's a function of the phasing that I've talked about. I think the last one from Vanessa about the feature phones. First, I think she's right about the smartphones. We need to make the smartphones more accessible to all of Ugandans, but I want to say here, and I want to clarify, that when I said we moved the bank to this phone under the PDM, what I meant is, be it feature phone, be it smartphone. So don't be worried that the money stopped at the leaders with their tablet. No. And this one, with the systems we have in place, which is also a very good thing for us, we can trace this money right from the treasury to the person who got it. The date they got it, the time they got it, and which is a very good thing also. They transact on public holidays, on weekends, which we find very exciting because we see the system every day. But that money goes to their phone, whether be it feature phone, be it smartphone. So no money is lost. There's no middlemen, there's no leakages. We can trace that money from the treasury right to the last person who got it. And I can assure you, all of that money has gone to the people of Uganda. At least we have the record to prove that. But I think the issue that you've raised on making the smartphones more affordable, more accessible, that is something, and I think all of us, not just government, we can work out. Thank you very much.
Julius.
I'll start by Complimenting Mr. Musa Lukwago, I know Pearl Bank is one of the active players in the insurance consortium, and a very significant portion of our agriculture book actually is insured with the subsidies from the consortium. To encourage other players in the industry, we shall arrange for you to come and address the Uganda Bankers Association so that other members can become more interested and become aware about how that product works. For Ms. Rachel Muhwezi, integration with FlexPay, already Wendy has integrated with so many other institutions. The very first two partners who integrated were MTN and Airtel. There is interoperability between the two. If you go to a Wendy agent, can serve you both MTN and Airtel. If you go to an MTN agent, they can serve you Wendy. So already that is working. Then we went ahead and integrated with Housing Finance, Pride, Opportunity Bank, GT Bank, Finance Trust Bank, Exim. We are working on 2 other banks in the pipeline. It is open APIs you can integrate with the entire industry. And so far we've onboarded close to 12,000 circles onto Wendy. So in terms of when you talk about shared infrastructure and trying to power others to extend services, I think we've taken lead in that space, and we've opened up for anyone interested to come and actually work together towards delivering the service. What benefits will come with FlexPay specifically? Already, Stanbic Bank has a very wide branch network, and FlexPay has a large number of merchants. And when you go to a shop, you may find maybe you're on Wendy and this merchant is on Stanbic. You can pay instantly. If you are a Stanbic customer and you are somewhere remote where there is no Stanbic Bank, you can deposit. If it is a Wendy agent, you can deposit in Stanbic Bank instantly. The same with a Wendy customer. Can go where there is Stanbic, where there is FlexPay, and can actually deposit in Pearl Bank instantly. So that is really the whole benefit of working together to provide a solution. No one can provide that magical solution that covers the entire country, the entire population. Mr. Bernard Busurwa, you wanted statistics. I think I would have to get my team to provide you statistics. But what I can assure you is the products are different. The pricing is different based on the solution that was created. What we price for SCF is different from what we price for large-scale farmers. By then, these ones borrow at 0%, for example. I don't know whether many of you are aware. We run the large-scale farmers facility where to boost production, to address food security, and farmers are borrowing at 0%. Government of Uganda is meeting the interest portion. We only provide principal and management of the credit. SCF is different, it's at 12%. The AFD will be maybe at about 15%, 14 to 15%. So different facilities are priced differently. It depends on what particular product we are trying to push as a solution. What is the cost of disbursing these loans? One of the challenges we have, there is a very high cost of credit in this country. If you look at the industry, every 100 shillings disbursed, 5 goes bad. Bank of Uganda is here, they have the statistics. So already, if you disburse 100 shillings, you are likely to collect 95. Average industry. Now remember, this includes the top end. Now if you go further down to the disadvantaged communities and agriculture and rural communities, this ratio even goes further higher. So there is a very high cost because of cost of credit, and then there are also other costs that are related to management of credit that we can't go into right now, but they also influence the cost of credit. And I know they are being tackled as an industry with different players to see how best to bring down the cost of credit. And the last one was from John Katerera. I don't know what the question was, to ask commercial banks to, maybe it was a request.
That ask commercial banks to make it easier for us to access agricultural credit facility.
Yes, and I think that has been heard. The governor is not here, but the governor has also approached the banks and has come to us and asked we need to do a lot more around agricultural lending. So there is a push in that direction. And you'll see a lot of that in the response around the 10-fold growth strategy. The A is agriculture development, agro-development. So it is very well addressed in there. Thank you.
All right, so that marks the very end. Let's clap for the moderator, Ms. Rashmi Pillai, Impact Investment, Access to Finance and Digital Payments Specialist. And let's clap for Helen Kirungi, who is the Senior Manager, Bank Tech MTN Mobile Money Uganda Limited. And we can't afford to forget thanking Mr. Joseph Mugume, CEO, Ebo Sako. Mr. Goloba Kezekia Lwanga, Parish Development Model. And very finally, Mr. Julius Kaketo, Pearl Bank. Thank you. We are moving to the next panel discussion, but before that, just want to alert you that we have working tea, so feel free to quietly walk out, pick a cup of tea, and come back so that we are able to conclude this within the shortest time possible from now. So we'll have working tea quietly. One person can move or two, but let's ensure that the rest of the proceedings can proceed. So our next panel is going to handle the session on mainstreaming green financial instruments for a climate resilient Uganda. And our moderator is none other than Ms. Goret Masade, the CEO of Uganda Institute of Banking and Financial Services. I invite you, Goret, to come and take us through that panel discussion.
Thank you very much. The people online were wondering whether I'm Miss or Mrs. I happen to be Mrs. Yeah, so good afternoon. Is it afternoon? Yes, good afternoon, ladies and gentlemen. The table I'm seated at, everybody felt like you've sat for a very long time. I'm going to request you to stand up for just a short time. Yes. And stretch in a manner that you'd like to stretch. Not aggressively. Yeah. 1, 2, 3. Yeah, you may sit down now. So today I am honored to moderate a panel on mainstreaming green finance for a climate resilient Uganda. And of course, to moderate a panel of very distinguished ladies and a gentleman. But before we do that, we just want to speak to the background of all this. And I'm luckiest today because I don't have to speak a lot. Not at all. The need is clear. One would say Uganda is increasingly facing, I think it's no longer increasingly facing. It's very, very, very clear. The very recent events are evidence in themselves. The outcomes are evidence in themselves. Usually, because we are training institutes, you start by telling people, you know, the clients will get affected, the banks will get affected. Now it's clear. The nation is getting affected. You have livelihoods being affected by climate. You have a businessman being affected significantly. You have a nation being affected. So it's very clear. But we are in a situation where, at the very least, we can see the government, partners, business people that care, coming together to come up with frameworks that can assist us in ensuring that we get in a better place. The country has got nationally determined contributions that demonstrate our commitment to get into a better place. The National Development Plan 4 has that as well. Globally, green financial instruments such as green bonds, sustainability-linked loans, blended finance mechanisms, and climate funds are facilitating the flow of capital toward the climate-smart infrastructure, renewable energy, sustainable agriculture, and ecosystems for ecosystem conservation. Uganda's financial sector, led by the Bank of Uganda, as you know, the Capital Markets Authority, commercial banks, and development partners, as I indicated, are actively exploring ways to adapt and scale these instruments into local conditions. Uganda has recently made significant strides to align its financial system with the climate goals. This includes the launch of the National Climate Strategy 2025 to 2030, the National Green Taxonomy, and the World Bank's Country Climate and Development Report, which you must have all seen. These frameworks offer both justification and opportunities to integrate green financial instruments into Uganda's financial ecosystem. So today we are talking about how can we really mainstream green finance into our operations. I'm delighted to introduce our panelists. I'll start with Ms. Gloria Gasasira, a financial sector professional with over 20 years of experience in central banking and international finance. Currently, she serves as the director in the Financial Markets Development Department at the BOU, where she leads initiatives to promote growth and efficiency of Uganda's financial markets. Prior to that, in the Financial Stability Department at the Bank of Uganda, she coordinated initiatives to mitigate systemic risks, develop macro-prudential policies, and strengthen crisis management frameworks in the financial sector. So I think all this really ties in very well with what we are discussing today. My next is Ms. Mona Muguma Sebuliba, Mrs. Chief Executive Officer for ABI Finance. She leads the formation of strategic partnerships to facilitate access to sustainable green finance for agribusiness and smallholder farmers across Uganda. Beyond her leadership at ABI Finance, Mona has extensive board service highlights. Her extensive board service highlights commitment to various sectors. I think you cannot talk about green finance and you leave out Mona. So Mona, we are delighted to have you. You represent green. I don't know why you're not in green today, but yeah. Our next one, another one you cannot disassociate with sustainability is Ms. Kathy Adengo. Kathy is the head of sustainability Stanbic Bank Uganda, and she's responsible for the implementation of the bank sustainability strategy and environmental, social, and governance priorities. Kathy holds a strong track record in sustainability, ESG management, corporate affairs, reputation management, and social investments and sustainable business. Please welcome Kathy. Finally, James, the boy child. I think people are getting concerned. But things sustainability, Mother Nature tend to be feminine. James Muhwezi is the senior climate finance officer, private sector engagement at Uganda's Ministry of Finance, Planning and Economic Development, where he leads efforts to mobilize private sector investment for climate action. He has championed the creation of Uganda's first platform for structured government-private sector dialogue on climate finance, convened the inaugural National Private Sector Engagement Forum, and co-designed the National Climate Finance vehicle, among other initiatives. Ladies and gentlemen, welcome my panel, and I'm really delighted to So my first question will go to James. So James, given what we know and what we see, how can Uganda's national green taxonomy be effectively adopted by banks, capital markets, and the businesses to guide instruments?
Thank you. Thank you very much, moderator, and thank you, everyone. I think to better answer the question, I need to highlight what the taxonomy is briefly, and then maybe discuss how it can be better adopted. So, ladies and gentlemen, the Ministry of Finance, through the Climate Finance Unit, recently developed and launched the National Green Taxonomy. The National Green Taxonomy is nothing other than a classification, the way we classify projects to be either environmentally sustainable or not environmentally sustainable. That is a classification tool. It's not a strategy, but it guides investors on selection of a project that is considered environmentally sustainable and acceptable for investors to put in money. And this taxonomy has got a number of objectives. It has just 6 objectives that help us to align projects. And these objectives look at either it is a mitigation project, you are designing a mitigation project, and mitigation is about reducing greenhouse gases, or it is adaptation project. Adaptation is about coping with the effects of climate change. I think, moderator, you highlighted some of them that we have witnessed recently. Either it's about pollution prevention and control, biodiversity protection and restoration, and ecosystems, or a project that is going to help the country transition into circular economy. Circular economy is about what is wasted here can be usable in another process in the next phase, etc. So those are the environmental objectives that we look at when we are looking at a taxonomy. And the taxonomy has got a number of definitions. It has got a number of definitions, it has got principles, and it has got standards. So for us to better adopt as the financial services sector, as the corporate entities, as projects, we need to first of all understand the taxonomy's definitions and standards. So for me, I think I would first point into that direction. And how can that be achieved? It is a collaborative effort. We launched this taxonomy on 11th of September, just 1 month ago. And after the launch, we are now into the implementation and rollout phase, and we shall not achieve it alone. And so we have formed what we call a National Green Taxonomy Committee that involves most of the stakeholders that are in this room. So as to the way forward, we will be circulating the information on the dialogues that are going to follow, and both public and private sector will be involved at every stage of implementation of this strategy. And then, of course, the next important thing, given that is a new, it requires adoption at every level, some kind of, we are considering certain incentives for adopting this strategy. And the incentives are simple, because it's a question of explaining the benefits one fetches by aligning, if it is a bank, for example. If a bank is aligning their portfolio to the taxonomy, then one would look at what would be an incentive for a bank to align their portfolios to the taxonomy. So a number of incentives are being packaged, but to get to a level where these incentives can be operationalized, we will still work with the sector, especially the Uganda Institute of Banking and Financial Services, and the Uganda Bankers Association and others, and Bank of Uganda, to make sure that these incentives being proposed are workable. You know, sometimes you can propose an incentive that is not implementable, and that can be a problem. And this can be to the banking sector and also to the other clients, non-banking sector, the users of banking services. So at every level, we are looking at rolling out certain intensive incentives. And then, of course, the next thing that we are looking at, a taxonomy helps us to remain compliant to the international and national reporting requirements. Because if a project is considered green and you have aligned the project in line with objectives that I have mentioned, then it is easy for us to report about the impact the project is bringing to the community. And so when we speak of, I have had a lot of the reporting standards that we have, the ESG disclosures that we have now. So if we align ourselves with the taxonomy, I mentioned that we have definitions and standards, then reporting now becomes easy. Reporting is a national requirement, but under the UNFCCC framework, it is also a global requirement. And if we are compliant, it means more climate finance resources will be realized in the sectors. And maybe the other one that I can speak about, moderator, is that the climate finance unit, which I didn't mention, has got a mandate under the Ministry of Finance to mobilize finance from national and international sources, from public and private sectors. So a taxonomy helps to bring everyone on board. Right now, what we have been having is less private sector participation in climate finance mobilization. In Uganda, we are at about 12 to 14% private sector participation, compared to Asia and Southeast Asia, which is an average of about 55% participation. So you can see where we are now. And so the taxonomy is going to help us bring in the private sector, which I incidentally lead at the ministry, into the equation of climate finance mobilization to now bring more resources that are required for climate action. We have got an ambition which is so high. We have got the nationally determined contribution in Uganda, revised 2022, that was costed at 28.1 billion dollars, up to 2030. Right now, our performance to that NDC is about 34.7%, according to the recent national stock take. So you can see the need for us to bring in the private sector to drive investments that are green across the sectors of NDC, which are 18 sectors. We have 5 mitigation sectors and 13 adaptation sectors. So the taxonomy is a critical tool to crowd in the private sector to do more climate action. Thank you for now.
Thank you very much, James. I think that's quite good. I believe we should clap for that, because particularly around the area of creating clarity through the taxonomy, but the issue of incentives, I think that's very, very good, so that then, you know, people can be motivated to either invest or actually utilize or provide the right financial services. Maybe what I would ask very quickly, how fast do we see this coming into play? I mean, when I look at the disasters that just happened, it would imply that we need to get this like immediately, at work immediately. How fast do we anticipate, for instance, the issue of incentives? I know reporting, there's a great deal of work being done, for instance, by the Uganda Bankers Association with partners like ABI. But what about that? And also, for the private person who is not regulated, somebody can decide, you know, I don't need any financing from the bank. So what sort of incentive are we looking at? Are we looking at both negative and and positive incentives, what would a negative incentive look like?
I think that's a nice one. How fast do we have to get this moving? I think it is required like yesterday. Other countries have already rolled out these strategies. But let me begin from the non-regulated entity. For the non-regulated entity, that's why we have rolled out a national private sector engagement forum. We had one on 10th of July this year. And that forum is supposed to now create an opportunity for the non-regulated entities and the private sector in general to be able to give us feedback on what they think such initiatives and incentives should look like. We have received very good feedback. That feedback is going to be integrated with the regulated entities, and then we come up with something that cuts across, that is equitable. So that, I think the first meeting is going to be called in January. Because of November and December, with the Conference of Parties, we did not see that as being so viable. But January, Feb, we are going to have that done. But in the meantime, whatever low-hanging fruit we can have for rollout, that is going to proceed. For example, to support the taxonomy rollout, we already issued a mainstreaming guideline for financial services sector. Yes. The other day I saw the launch. I was not able to participate of the curriculum, the green curriculum. So those are some of the adventitious initiatives that are going to help in the implementation of the taxonomy. So it is required like yesterday to answer the question.
Thank you very much, James. Yeah. You know, anything incentive is exciting, and so we want it like yesterday. Yeah. Now to Mona. Mona, what are the priority sectors in Uganda in your thinking? What are the priority sectors where green financial instruments can have most impact?
I think I'm going to be very biased.
I know.
It's in the name, the Agricultural Business Initiative. So I'll start with agriculture. That would be in pole position. And the bias is not without reason. We all know that it's the largest employer and one of the most strategic sectors for this country, contributing about 24% of our GDP and a lot of our employment. So it touches quite a bit of everyone, almost in every part of this country. We're blessed to have a largely arable country, and in all its shapes and forms, from crop husbandry to animal husbandry. So I'd say, without doubt, focusing on agriculture in terms of green investments and green finance is critical. Related to that, though, is renewable energy, and renewable energy is critical in making the sector that much more efficient. We also have elements like transport and housing and infrastructure. I'll dwell a little bit on housing and infrastructure given the recent events that we've experienced across the country and in the city around flooding. So those would also be related critical sectors to focus on. So in bias aside, I'd say agriculture, then you have renewable energy, transport, housing, infrastructure, and that type of thing.
Thank you very much, Mona. I am happy that you didn't get tempted to stick at agriculture and actually speak about everything else. And I think a sector that we tend to leave out, you know, it always remains somewhere in the documents, is capacity building. You know, education. I think it's very critical. And when we talk about agriculture and realize that if the roads flood and you do not have anywhere to transport these goods, it is a problem. But sometimes the roads flood because of ignorance. You know, while there may be infrastructure in terms of the drainage and everything, what about the people you see throwing stuff all the way and they end up in those drainages? So I want to speak to the issue of capacity development for the people in the room, that I think it should be one of those things that is quite high up there. In any case, if the facilities are there and the users do not know they are there, the developers do not know they are there, or they don't understand and why they should demand them, it's a problem. And I know that you're very passionate about capacity development, but I just wanted to say let's not forget it as one of the key issues. To Kathy, how can Ugandan banks, and we are so happy you're here to represent them, how can Ugandan banks and capital markets integrate climate risk assessment and reporting into mainstream operations? And what does that climate risk assessment look like?
Okay, thank you very much. I'm here in the capacity, yes, of Uganda Bankers Association. I do sit as the chair of the Sustainability Committee, but I'm also the head of sustainability for Stanbic Bank. So yes, it's within my realm that I can clearly elaborate a bit more on what's happening. So when you speak to climate risk, I think let's first take a step back to look at the context of banking. And speaking to James, and we must applaud Ministry of Finance and the Climate Finance Unit for putting in place all the instruments you have heard him speak about. The Green Taxonomy, the National Climate Strategy, and all the other supporting guidelines will enable us to understand what is required as banks to execute and implement not only just green financing, we'll also look at social inclusion financing, but address climate risk, right? Because from a sustainability perspective, we need to understand the risks involved with climate and also the opportunities that come with that through sustainable finance. So having said that, the Uganda Bankers Association put in place a framework. And that framework is hinged on 4 pillars, which look at the governance of how banks are going to be structured, all the way from board oversight, okay, to ensure that we are implementing what the guidelines and the frameworks are requiring of us, but also to make a difference to provide the financing and manage the risks within our economy. We've also got sustainable finance as a pillar. We've got risk management and climate as the 3rd one, and of course reporting. But speaking to your point on climate risk, now, maybe even as a show of hands, can I get, just by putting your hand up, how many people know what climate risk is in the room? and can comfortably go to a function and articulate it, and what it really means for you. So now when in the context of banking, the reason I say this is that, first and foremost, to your point on education, capacity building is going to be one of the key things needed in the financial institutions. To get the financial institutions teams to understand what is required to manage this risk. So the reason why the banking sector ESG framework is fundamental to that is that it has provided guidance on how that will happen, but also advocate for the partnerships needed to train and skill up our teams on what is climate risk and what does it mean for the financial sector. So as we do that, and what it means to mainstream, actually embed it, understand, identify it, measure it, do what is called stress testing. The first time I talked about climate stress testing to our teams, they were like, why though? Because they were used to all other types of stress testing in banking. But now you're talking about, they're like, are we going to check the rain? We're stress testing rain? And it's like, yeah, absolutely. There's going to be moments where we have to articulate this and what it means for our portfolios. What does it mean for our clients? And to be put simply, helping each of the banks understand that as much as we're driving the growth of various sectors, agriculture being one of the most fundamental because we also prioritize funding to it. The minute we don't take care as financial institutions, understanding the risk of climate on these sectors and these portfolios, we would be gambling the future economy of Uganda and not appropriately, adequately putting in place the right mitigations. So it's very important that in combination with education and capacity development on climate risk, the teams also have to go through a very clear process of understanding the technical aspects to developing the solutions that go around creating creating solutions around climate risk. So to sum up, in essence, the critical aspects that will come, and you'll see us doing more so, is incorporating climate risk within our risk appetite statements. It's going to be fundamental. There will be board oversight, and board members will be accountable for ensuring that climate risk is actually managed, and we identify those risks within our portfolios. And then maybe last and most importantly, looking to the partnerships on the training and the capacity development needed, just to ensure that we're actually equipping the right people, including partners, including the clients. So, and I always like giving this example, which is the simplest way to explain climate risk, is that we all know you love your beverages, and beverages are for Friday, maybe Friday night. But a very critical ingredient to some of these beverages is water. If you have a problem with availability of water and scarcity of water, you will have an economic crisis over time. So the reason it's important for us to ensure that our clients are protected and we manage the future of understanding what are we financing. These clients are some of our clients. All the banks are funding a lot of beverage companies. It could be soda. Let's talk about nice things. It could be soda, or it could be Friday beverages. Each and all of those companies are highly profitable. But for them to remain sustainable and profitable, we must create solutions that address climate risks that could impact their sectors. So that's how we plan to get to go forward and ensure that what is being put at a policy level is implemented, and we start to measure it very clearly in the banking sector.
Thank you. Thank you very much, Kathy. I think you've really brought it home. The last time I checked risk, you know, when you eliminate the issue of clear English, the impact of uncertainty on your achieving your objectives. And right now, when I think about uncertainty and this weather and climate, I don't know whether it's uncertain anymore. So it's really beyond uncertainty. It becomes a reality. And I also think about banks that like, for instance, financial institutions that like to specialize in a particular segment. And I wonder if there was anybody who had concentrated on the traders in inachievable. I do not know what they would be thinking right now, because it's a clear, it stops being a risk. It's now an issue. It's an emergency. So I think for us, even as we talk about risk, it is very clear that it's what? An emergency. Gloria, how can regulatory and institutional frameworks led by the Bank of Uganda and other agencies create an enabling environment and support the mainstreaming of green finance into Uganda's financial ecosystem?
Thank you, Goretti, for that question, and good morning, good afternoon, everyone. So I think in terms of the regulatory structures and regulatory frameworks, it really comes between what James has talked about and what Kathy has talked about, because the regulatory frameworks are really the means by which we can systematically integrate green financing and climate aspects into our financial sector. And so the role of regulatory agencies will come from providing regulatory guidance, clear regulatory guidance. And as Kathy has said, some of the banks have already made progress, are already starting to implement climate aspects into their business decisions, into their operations, and that's a good thing. But clear regulations will help to provide standardized definitions, for example, on what is green activities, on the required disclosures, on the risk management protocols, and things like that. So that's where the regulatory frameworks come in, and it allows for them to be implemented uniformly across the sector. For Bank of Uganda, in our strategic plan, the 5-year strategic plan that started in 2022 to 27, we prioritized integrating ESG principles and climate change into our operations, but also in the regulatory oversight of the financial sector, the supervised financial institutions that we oversee. And in the last panel, and I think Kathy may have alluded to it, the banking sector framework, the ESG framework for the banking sector, is now part of our supervision process. So we continue to monitor the compliance, and Mr. Kaketo spoke about the progress that they have made in terms of compliance. We've also started to issue regulations and guidelines on reporting, aligned with the International Financial Reporting Standards, S1 and S2, that provide guidance on disclosures, sustainability disclosures and climate disclosures. And after the National Green Taxonomy was released, we've also issued guidelines on managing climate-related financial risks. So that's a connection I was talking about. We get the policy, translate them into regulatory frameworks, and then support the supervised financial institutions in implementing them. And I'll just mention one thing where we've seen a lot of progress. There's a financial markets index, the Africa Financial Markets Index, promoted by ABSA. Uganda came third in 2025 from fourth last year. And one of the key considerations that contributed to that performance was the way our financial sector is integrating ESG principles. So that's a good thing for us. It actually, and that's not just Bank of Uganda, it's all the financial sector regulators, CMA, UBRA, and insurance. So it's a very good, being recognized like that is very good for us because it gives assurances that our regulatory frameworks are robust enough and competitive to support green financing and reduce risks of things like greenwashing. So, yeah.
Thank you very much, Gloria, for that. And of course, as we talk about the regulatory frameworks, we also think about voluntarism. It is our hope that as the regulatory environment becomes, more supportive, that we'll also be having a lot more voluntary, particularly from those that are not necessarily regulated, to walk the journey with all of us. Now, your very final word. I know that we don't have many, or maybe no. Let's have the question and answer. Do we have time for that? Yeah. Question and answer? Okay.
So we'll take 2 questions from here and 1 online. Our very first hand over there. Please unmute your microphone and ask your question.
Thank you very much. Thank you, panelists, for a very insightful discussion. Mine is actually not a question, it's a quick appeal to Kathy, because we've had a lot said about climate change, climate finance, and all that, green finance. But the gist of the panel was talking about mainstreaming it. How do we mainstream it? And just a quick appeal to Kathy, because she represents all the financial institutions, is that I think for us to mainstream climate finance, we need to make it a new normal. Because climate change is here, we've seen that all the risks associated with climate change, droughts, floods, mudslides, the physical risks, the transitional risks, the financial risks, all of these risks are real. So instead of approaching climate change as an environmental issue, my appeal is that financial institutions should approach it as a balance sheet issue, because all these risks actually culminate into their balance sheet in form of bad loans, in form of depleted collaterals. So the way to look at it is not just a project in the bank or as a green project, but just good finance, and good finance that takes care of all the risks, including the climate risks, and builds resilience. That's my appeal to you. Thank you very much.
Thank you, Colin, for that feedback. Let's have the gentleman here, then we'll go online.
Thank you very much. Chimera Henry, I work with the Consumer Center, and I would like to appreciate the discussion with regards to green financing. And I would like to bring in a perspective, and our colleague from Ministry of Finance could look at it. I know others, like Abbey Trust Development and Abbey Trust Finance, might go in, knowing yesterday I was at an engagement where Abbey Development was rolling out technologies and innovations in the agriculture sector. My focus is on the extractive industry or sector, looking and also bringing in the element with infrastructure development. And one example of commercial agriculture where experience tends to be a monoculture, and the elements of sustainability. Just imagine square miles of just one single kind of crop. What are those sustainability aspects? But mainly, what is in the program with regards to the extractive sector, industry, not agriculture, in mineral extraction, we have the oil extraction. What are the sustainability aspects taken care of in there? Thank you.
Thank you, thank you. Great. We'll take two from our online participants, then you can answer at once.
Robert?
Yes, please.
We have one burning one here.
Just a minute. Can I first take these two?
Okay.
Yeah. The first one is coming, has been picked from YouTube, and it's coming in from Mugerwa Martin. And the question is, how does the Uganda Bankers Association plan to leverage open banking as a strategy to lower the cost of transactions and merchant acceptance? Since you have a panelist from UBA, I think she'll answer that. And then the second and last question from our online participants is from Kajumba Annette, picked from LinkedIn. The question is, can Mr. Muhwezi share the link to access the taxonomy document? Those are the two questions from our online participants. Over to you, Goret.
Thank you very much. We will start with Jay. We have one burning one.
The one burning one.
It's going to be brief.
Yeah, brief, please.
And I just wanted to pick Mona's guidance or Catherine's guidance. It is easy to speak about sustainability in the formal sector. Now, my name is Gava Ibrahim. I work with the Uganda Institute of Banking and Financial Services. But we go out to the market to talk about financial literacy, and we merge this with sustainability. I wanted you to help me demystify, from a perspective of the informal sector, if we are to talk about the climate risk, what are the low-hanging fruits? How do we quickly make them appreciate? Because many of them are the people that are cutting the trees to make sure that they get a living. How do we make them quickly appreciate the climate risk? I'm sure that Catherine or Mona can be able to share some guidance, especially from the perspective of the informal sector. Thank you.
Thank you, Gava. Over to you, Goret.
James first, please.
Yeah. The link can be this document, the National Green Taxonomy, and a host of others that we have launched, including the National Green Taxonomy and the Country Climate and Development Report, mainstreaming guidelines. Everything is on the Ministry of Finance website, so you can please go to the website. You will get all of these documents have been uploaded so far. Thank you.
Thank you. And your last word, please, because we may not have an opportunity. James.
So my last word, I think I build from what Dr. Collins just mentioned, to not have this mainstreaming as projects in institutions, but as a new normal and a way of doing things. So my last one could be that mainstreaming climate action now in entities, corporate entities, the banks, is not an option. It is, I would say, just an imperative that is going to safeguard many things, to safeguard progress that has already been made, and especially by ABI Trust that is doing a lot in the agricultural sector, our Uganda Development Bank, and other initiatives within the commercial banks that are happening. It will promote inclusion, which is the main agenda for today, and also ensure a sustainable future for all of us. And maybe number two, as a conclusion, is that we need to familiarize ourselves more with the kind of instruments that we have launched, and be more innovative as stakeholders in coming up with, for example, the incentives that I talked about. Incentives are not easy to implement. They are a difficult thing to implement. So we need to think more innovatively. For example, if we talk of innovatives beyond what is common, you could have fiscal incentives and non-fiscal incentives. Okay. So the fiscal incentive side, I would give an idea of you have got tax credits, for example, for entities and projects that are aligning themselves to the taxonomy and becoming greener. Then you would talk of accelerated depreciation, for example. To the commercial banks, new things. Why I'm saying this, they could be new, but they are happening somewhere else. Risk weighting our capital, making adjustments within our capital could also be one way to look at it, but that requires regulators now to help us. That is why we cannot implement these incentives just by ourselves. And even recognitions. We give recognitions for entities that are, for example, in this forum, if there was an entity that was identified, the way we have given certificates to our colleagues that participated in the development of the strategy, we could also think about recognizing entities in future forums for those organizations that are aligning themselves to implement the green strategies, etc. So we need to be more innovative at all levels. Thank you.
Thank you. Thank you very much. I know that we did not respond to the question on extractives. I don't know whether any of the ladies, as I go along, you'll be able to answer to that. I think green finance or transitioning extractives. But Kathy, let me get back to you.
Okay.
Your questions.
All right. So there was a question about lowering the cost of transactions. How that will happen, and as you'll be seeing, will be leveraged through partnerships. An example that was mentioned even in the previous panel, you can see the partnership that Stanbic through FlexiPay has on the Wendy platform. The essence of that is to lower the cost of transactions on those platforms and also supporting merchants who are involved in that process. So over a period of time, what we're trying to do is scale impact to the unreached, which is what financial inclusion aim is really, to the underserved, and ensure that it's at an affordable cost. So by doing these partnerships, we're working on ways to make sure it's just cheaper for us to extend these services and provide everything that customers are looking for and achieve the financial inclusion. Then one of the questions around how we ensuring that the average SME or even the trader, anybody, average Ugandan actually understands climate risk in their business and what it means. Some of the things that the banks are being deliberate on is you see what they're doing with their financial literacy programs. It's really a requirement for most of us anyway. We will make sure that we're providing financial literacy, but embedded in that is a component on addressing ESG, not just climate, also social matters. So you'll find that there are holistic financial literacy programs that are embedding that topic. We work with NGOs who are experts at talking about what it means when climate is affecting your farm, how to plan better agriculture practices, all of that. And I'll let Mona speak to it a bit further, but that's some of the work that we're trying to do. Partnerships come along with that, but at the same time, remodeling what financial literacy means, because by doing that, educating them about what climate means, you're also educating them about how to plan better with their finances. So that's another component. Yeah, but thank you.
Thank you. Thank you very much. Gloria?
Thank you. I don't think I had a question,
No,
but
you didn't.
Just last ones. Yeah, so the bottom line, I think, is really what Colin alluded to, and James. We're really trying to make green finance a normal and integral part of doing business in the financial sector. And this, we already have the clear policy signals, the national policies. We have some of the frameworks, but we need to really strengthen our regulation as regulators in the financial sector. And I can't overemphasize the role of institutional coordination. I think everybody on the different panels has talked about it. Coordination is extremely important, because in implementation, you need that stakeholder engagement, that collaboration that will make implementation really practical, and everybody to have ownership of these initiatives. It can also help with the capacity building that you brought up, Goretti, because as we build as we collaborate, we can start to have standardized regulatory requirements. We can continue to publicize and bring awareness to these issues and capacity building. It can also be a strong enabler for product development, which will make our financial sector more diverse and inclusive. So with all those collective efforts, it would enable us to create a financial system that not only manages risk, climate risk, but also channels capital towards sustainable, inclusive, and resilient growth. Thank you.
Thank you very much. And Mona?
Just touching a bit on the question that you said was left unanswered around the extractives, and I think it was directed to James, but I believe, and he can correct me if I'm wrong, they had a contribution, the minerals and extractives had a contribution in the development of the taxonomy. And so it always starts with that engagement, that stakeholder engagement that Gloria just talked about. So that engagement definitely has happened, and it's important to see what capacities are required to operationalize, because a lot of work has been done by having the right policies, frameworks, and now I think the layer at which we are is, again, touching what you talked about, the capacity building, the understanding, then the implementation. So none of that will happen without the capacity building, and it informs part of my closing remarks. We underestimate the investment that is required in the capacity building, and indeed a knowledge partner like yourself, for instance, for the financial services sector like yourself is very critical. And so in say, who is building the capacities within the extractives? Who is supporting the informal sector? Any one of these sectors, we really do underestimate that, and we need to invest in it and actually budget for it. There's a lot of private sector in the room, and even public sector, the allocation, the right capital or budget allocation to the capacity building, taking a long-term view. The other one that I'll say is that sustainability and green initiatives, we really need to think of the long-term view. We can't think short-termism, and for a long time, financial sustainability, and indeed there'll be need, and maybe this is where we look at the regulator, there'll be need to harmonize the reporting frameworks and the reporting frameworks that has been skewed towards financial reporting, and it's very short-term in nature, and the reward by investors, by shareholders is very short-term in nature, and there's need to then look at the long-term interventions that are required. We'll see some of these gains coming through in the long term. So the regulator also needs to help in moderating shareholder appetite, shareholder longevity for the long haul. So it's really capacity building, adopting a long-term mindset, the engagement around the various sectors, and really just keep at it and keep building.
Thank you. Thank you so much. And I think for what we've been discussing here is to ensure that when you listen to the questions in the room, that issue of coming together, that when you're discussing an issue like this, why wouldn't extractives be here? Why wouldn't all the sectors be here? Because after all, it ends up in finance. But for your benefit, I know that the banks are thinking about transitioning, because those are very high energy sectors, transitioning them to renewable energy. But also they've told you the issue of equity. Are they young people doing this business? Are they women? How are they? Is there equity in all this? Are they disenfranchised? And I think all this the banks would be looking at least when they are financing that. Just to also mention finally that at the Institute we are taking this seriously. We just launched a campaign, a financial awareness campaign, and we are talking about the plundered out. It will unveil in full form. And it's really about balancing the two, financial health, but also sustainability. And we keep talking about the farmers, but the people in this room also need to balance financial health and sustainability, because they contribute to it. So thank you so much, and please give my panel a very big hand of applause.
Thank you very much, Mrs. Goretti Masade. I got the title right. The CEO of Uganda Institute of Banking and Financial Services. You may... okay, sure. They need a photo. So while they take the photo, I was thanking them. That we want to thank the moderator, who has been Mrs. Goretti Masade, the CEO of Uganda Institute of Banking and Financial Services. Want to thank Kathy for really coming in to bring into perspective the UBA perspective. Want to thank Ms. Mbona Muguma Sebuliba, the CEO of Abi Finance, and want to thank Mr. James Muhwezi, Senior Climate Finance Officer, Stroke Private Sector Engagement Specialist at Ministry of Finance Planning and Economic Development. And very finally, want to thank Ms. Gloria Gasasira, the Director of Financial Markets Development Committee at the Bank of Uganda. And that has been a very representative panel, and they've done a good job. So let's clap for them once again as they go back to take their seats. Ladies and gentlemen, we are moving towards the end of this engagement. I quickly reflected on the theme of the day, which is access to usage, advancing inclusive financial product uptake in Uganda. We've spoken about inclusive financial products. We've spoken about mainstreaming green financial instruments for climate resilient Uganda. But there's one thing that we've not spoken about. Because in all this, especially when we want to increase the usage of these financial products, we need customers, financial consumers, to have trust in whatever we do. So you'll agree with me that we can't leave this room without talking about enhancing consumer trust in financial services. Ladies and gentlemen, please join me in welcoming the moderator of this panel, who is none other than Mr. Anthony Kamwesje, Research Manager at IPA Uganda. And I will give him the privilege of introducing his panelists.
Good afternoon, ladies and gentlemen. Before we go far, just to give a brief background, and I have the honor of moderating this session, which is about enhancing consumer trust in financial services. So building trust is fundamental in achieving sustainable financial inclusion. And in Uganda, financial access has expanded considerably. And this has been happening for the last, I should say, decade. And according to, like the World Bank database, this has been spoken about. I think it was the first moderator, where we have now reached at 73%, and which reflects an increase in digital adoption. However, you will notice that increased access does not usually translate into active usage or sustainable usage, if we are to say. And this is largely due to low consumer confidence and trust in formal financial systems. Furthermore, if you look at the research conducted by Innovations for Poverty Action, where I actually work on digital financial services and consumer protection in Uganda, you notice that there are some hidden charges. You look at unclear pricing structures, tendencies of data privacy, breaches, and all these incidents on digital fraud continue to undermine user trust and confidence. And when there is no confidence, then there is diminished trust in the financial systems. Our objective for this session, therefore, is to assess the current consumer protection landscape and to explore the innovative mechanisms for effective complaints resolution that foster trust in Uganda's financial sector. That said, I want to take the honor to invite the panelists for today. I will start with Mr. Andrew Kawere. Yes, Mr. Andrew is the Director of National Payment Systems with over 22 years of involvement in various impactful roles in the private and public sector. Andrew, you are welcome. There's a lot that can be talked about Mr. Andrew, and I'll give you the honor to read about him as he takes his seat. Next, I would like to invite Dr. Theopista Sechito Ntale, commonly known as Mama Theo, a distinguished Ugandan banker, social entrepreneur, a leading advocate of women's financial inclusion and consumer protection. Thank you so much for joining us. I won't take a lot of time, but invite Mrs. Rita Nansasi Waswa, Chief Manager, Legal Services Regulation Authority, and currently serving as the Acting Chief Executive Officer of Uganda Retirement Benefits Regulatory Authority, UBRA. Thank you so much. And lastly, I would like to invite Mr. Hussein Musiho, Principal Commercial Officer, Ministry of Trade and Cooperatives, a member of the Consumer Protection Bureau, COMESA Competition Commission, and also a member of the Education Curriculum Committee, COMESA Competition Commission. Thank you so much, Hussein. Great to have you. And now we shall go deep into the session right away. Thank you so much. My first question will go to, I think I will first go to Andrew. So, Andrew, we would like to know how effective a Bank of Uganda's current consumer protection frameworks in safeguarding financial consumers, and what progress has been done or made in strengthening these frameworks, and where are the gaps. We would want to request all the panelists to be as brief as possible, go straight to the point, so that we can make good use of our time. Thank you so much.
Thank you very much. I think in terms of what the central bank has done, let me first note that consumer protection is really fundamental on our side. There is no way the central bank can achieve its primary objectives, which is around price stability and a sound financial system, unless the consumers are empowered, unless the consumers are protected. So financial stability cannot be achieved if we have disempowered consumers. But in terms of where we are and what we've done, I think this has been a journey that I think started with the central bank clearly understanding that beyond the prudential aspects, which are the core, if I may use it, consumer protection is equally important. And so that, I think, was a critical start for this journey. Eventually, of course, the central bank set up specific units that were mandated to look into consumer protection matters. In 2011, we issued guidelines to basically lay the groundwork for consumer protection matters in the financial sector. Those guidelines laid out a number of principles which the institutions are expected to follow in defining their customer engagement programs. More recently, that was 2022, we issued consumer protection regulations this time, and those are under the National Payment Systems Act. Of course, this people will ask why these are not, general consumer protection regulations for the conventional financial services. But I think there are certain legal constraints around, the principal laws for the general financial services, which were addressed in the National Payment Systems Act, which was a more recent law. So we were able to issue regulations, that even have clear penalties, clear sanctions, and administrative remedial measures for the digital financial services. And I can also add that, of course, the priority was natural, given the stories that we've already had in terms of how much other digital financial services are doing when it comes to enhancing financial inclusion. So we do have regulations for the digital channels, and the central bank, within its internal system, has also elevated consumer protection to the strategic level. One of our key strategic initiatives right now is around development of a market conduct framework, and this has been a key area of interest laid out in the strategic plan. So what I'm saying is that this matter is at the heart of the central bank, and we are continuously exploring ways of enhancing consumer empowerment. The supervisory frameworks have been enhanced. We're now looking at conduct risk as one of the potential areas of interest when it comes to on-site assessments for the regulated financial institutions. But is it all rosy? I think I will be the first person to say no. There is quite a lot that can be improved, and maybe perhaps at a more global level, more broadly speaking, we need to get better organized as a financial sector or as financial sector regulators and harmonize some of these aspects. Financial services today are not just entity-based. It is more of the activity. You'll find a bank that is offering insurance. You'll find a payment service provider, a mobile money operator that is delivering a digital loan, which is underwritten by an institution under the microfinance department of the ministry. So you have a PSP, a mobile money issuer that is under the central bank. Then you find a lender who is under UMRA, and maybe there is an investment fund manager that is under the Capital Markets Authority. So I think at a broad level, one of the areas that we shall need to work upon is a more harmonized approach to financial sector complaints management, for a unified customer, a uniform customer experience, because what affects UBRA will affect the central bank, what affects the insurance will affect the capital markets, and so it must be a unified approach. That is a conversation that is already underway under the structures of the National Financial Inclusion Strategy. Two, I think we also need to better enhance, or rather better leverage technology. From basics, like chatbots and things that would enhance customer interactions from whatever, remote area they could be, to more advanced applications of, say, AI in protecting customers, predictive analytics for the service providers to pick up unusual patterns on customer accounts. These are things that it shouldn't be the customer to, identify suspicious activity, say, on their financial account before the provider has picked this up. So I think I see more use of technology. I think we should be seeing more adoption of technology on the financial service providers side to do those predictive analytics and better protect customer assets. But also for our part as regulators, I think we also need to better embrace these technologies. And on our part as the central bank, right now we are working on an AI strategy, which is going to inform specific interventions across the different facets of the central bank's mandate. Consumer protection matters are inclusive. The other area that I will probably highlight is around infrastructure, and that comes maybe together with the technology, but also there is discussion of the setup of some kind of financial ombudsman. In many jurisdictions, consumer protection matters are outside the mandate of the primary regulators. In some countries, they refer to it as the twin peak model. So this is something that also featured, I think, in the NFIS, and the baby steps have been taken. The ministry, our counterparts at the ministry, recently launched Inshuti, Financial Services Advisory, which I think might be a good starting point to open this debate on the need for the setup of some kind of financial ombudsman to look at objective, or rather maybe the right word should be independent arbitration of complaints. Lastly is the ongoing work around fair competition. On the face of it, you could argue that fair competition speaks to the service providers. But in a market where you might have dominant players who could use that dominance to disadvantage the consumers, then the question of fair competition turns into a consumer protection issue. So with the coming in force of the Competition Act, our partners at the ministry issued their fair competition regulations recently, and the central bank is exploring these to see whether they do indeed address the central bank's concerns when it comes to consumer protection aspects. So broadly, I think that's where we are, and those are some of the key gaps that I think we need to address.
Thank you so much, Andrew. Wow. I think we all agree, especially with embracing technology changes. The AI has come, and there is a lot that we can benefit from it. Talking about having a neutral, or call it, for example, an ombudsman, I would want to ask our next panelist, who is Dr. Theo. In our recent consumer protection survey at Innovators for Poverty Action, we noticed that about like 19% of customers who got challenges, 19% of them were able to seek redress. So one wonders what aspects of financial complaint resolution mechanisms are working well, and where do customers still face challenges in accessing timely and fair redress?
Good afternoon, everyone. This is one of the hardest panels when you are standing between lunch and, but also I think prayer works. So I didn't know that Mr. Kawere would appreciate the ombudsman, but so I just want to thank everyone that made the journey. It has been about 3 years. Thank you so much, Minister of Finance, Richard, and the team. My name is Atopista Ntale. I stand for one thing. I stand for fairness. So I just want to disagree a little bit from what everyone has been saying. When you are at the stage of treating cancer, you cannot say we are preventing cancer. And depending on at what level you catch it, then the ability to be better, will be easier. So I still believe that when you talk about protection, to protect yourself, you will remember the other campaign of ABC. It was more of don't go there. It was not, you already in this is the solution. So I love the arbitration language, but I think protection is more about guarding, it's more about prevention. So what the Ombudsman is going to do is actually something that is different from what everyone else has been doing. I don't like a situation where a person walks to our office and that person already has a letter that is losing the property. We have, as a country, to know that just like human beings need doctors or lawyers to help you prevent or to help you prescribe, the Ombudsman is going to prescribe the relevant and appropriate financing. And I keep saying this, that when we did a survey across this country, even people here, most people have accessed funding that were not appropriate to your needs. Most people have made mistakes, even from the smallest product as a liability product. We recently had a lady, I shared it with Mr. Grover. She was saving for her child to go to university, but she had a current account. And she was very happy about that until we got the statement and she realized that she was losing 45,000. But she was not touching her money and still had her book intact. So what the Ombudsman is saying, yes, we are very grateful to the country. They are trying to do a lot of things, but there's still a lot of preventive approach before we get to arbitration. With the survey we did, thank you to UN Women, I don't think they are represented today, we realized that there were so many common elements that were leading to NPAs. And now, very interestingly, to bailouts. You look at a file and realize certain issues that if we had seen that application before the customer signed, then the customer would not have signed. So that's the aspect we are bringing in, team and the rest of the stakeholders. And one of the things we have also noticed is over-collateralization. We have a customer we are trying to help. We won't mention the bank, but you know yourselves. You took 6 titles and you are giving $700,000, and these 6 titles are almost reaching 7 billion. Why was it? Why was that? Because this includes even the cost of getting money, because you forced the lady to do valuation for all the properties. There is all those charges of, of registration. So what we are trying to do as the Ombudsman, we are going to be non-partisan. We're already working, we have been working for the last 2 years. And what we see in our office is unacceptable. Why? Because you and me are okay, because you understand the 32-page document. You are signing for 40 million and there is a document of 42 pages. The other thing that I want to share with you is when we did the survey, which was cross-sectional in this country, majority of the people we talked to, especially people who had defaulted and lost property, had not read the offer letters they were given from commercial banks. And they did not understand anything. The other thing we need to address, and I'll share it with people here, we are grateful that people erased the early redemption penalty. In our survey, most of the people that are now coming to our office, even in our daily interactions, banks are charging very high penalty charges. If you have given somebody money and is supposed to pay on the 20th and the money comes on 21st, you'll move from 23% and you go to 40%. And then you're talking about inclusion. So there are so many findings, and I appreciate the intervention. I'm not going to go through them because I'm not an expert, although I read about them. Yes, there are so many things that government is coming up, but preparing the consumer before the step of taking on any product, whether it's a liability or asset, I think would be the best approach to close the gap.
Thank you so much, Dr. Theopista. I know I will get back to you to make a conclusion. Now, we know that when consumers face challenges, there is that reduced trust that happens in the usage of financial services, like I mentioned earlier. Now, I wanted to ask Mr. Hussein, We are aware that the Ministry of Trade and Industry and Cooperatives now plays a central role in administering Uganda's Competition Act of 2024 and is also leading efforts on Consumer Protection Bill. So how is the ministry leveraging this mandate to enhance consumer trust and build their confidence in the usage of financial services?
Thank you very much, panelists, and I want to thank all the panel members who are with us here. I want to say that as a ministry, for us to implement competition and consumer protection, I think it was supposed to be implemented yesterday. Looking at the ESC partner states, we know Uganda has spearheaded the development of ESC, but we are lagging behind when it comes to the implementation of competition and consumer protection. Whereas we will be leading the rest, I think as far as this is concerned, we are lagging behind. What does the Competition Act 2024 seek to address? One is to promote and sustain fair competition in the marketplace. Sustaining competition in the marketplace, that means that the participants in the market are trading fairly. That includes financial institutions in the market. We know that the number of practices institutions and firms may, knowingly or unknowingly, bring to the side of the consumers, because all these institutions, whichever product that they bring on the market, they are craving for the consumer. So in the process of trying to bring or capture customer loyalty, there are a number of things that can come along, which may impact negatively the consumers. And in this case, we may talk about the financial consumers. What are some of the aspects that, for example, have been common in the financial sector? And for me, when I'm looking at the financial sector, I'm all looking at the formal banks and all the money lenders, because they contribute to the overall financial contribution in the market. One of the issues that has been common, and maybe all of us in this room have been a victim, is the issue of misleading information. This could be that the information that you are being given to help you make an investment decision is not the information that you may get. One, hiding costs, and also not revealing the true interest rates. That is one. There is also an aspect of unconscionable conduct. Unconscionable conduct, you know, a consumer is in a position of vulnerability compared to an established institution or financial structure. That, for example, many of us, for example, when you want a loan, you may not have the time even to read the terms and the conditions that may come along with that loan obligation. What also happens is that because a financial service provider wants to meet a target, may not tell you what are some of those other conditions that you may have to meet before you take on the loan obligation. So you end up just signing. Sign here because you want to pay fees. At the end of it all, you find that the charges that you are encountering or you are being told to pay are higher than expected. So as a ministry, we know that there are some sectors, for example, that are regulated, and one of those is Bank of Uganda regulating the financial sector. But how about other sectors? I know Insurance Regulatory Authority is regulating the insurance, Bank of Uganda, UCC regulating the telecom. But what are those other sectors that are not being regulated? What happened to such a consumer? So it gave a background as to why there was a need as a result of the Consumer Protection Policy 2024 that identified the gap that much as we have sectors where there are regulations, but there are also a number of sectors where they are not regulated, and that was the need for us to come up with both competition and consumer protection. So we are trying to position ourselves as an institution, collaborating and building synergies with those institutions that are already existing in consumer protection, to one, promote advocacy about consumer rights. Consumers should know that there are certain things that are a right to them, the right to information, the right to standardized info. What is that information that you are giving? My colleague from Bank of Uganda is here, and I want to mention this. I know maybe some of us have here are also victims. People are hunting those that they want to give loans, whether you have the need for a loan or not. That means that the decision to get that loan obligation is not informed by the need, but because somebody has called you, maybe has had access to your number, so he's telling you we have ABC. And the information he's giving you is not telling you that once you default on the first time, then this is what will happen. So as an institution, we are positioning ourselves, one, to advocate and create awareness on consumer rights. And it is not only consumer rights, but also consumer obligation.
Yeah,
as a consumer, and all of us are consumers also, you also have an obligation on your side. Sometimes when we seek for some of these products, do we seek for information? Is this information provided to us? What do we do with the information when this information is given? So generally, as a ministry, we are here to complement on what the specific sector regulators are doing, but also harmonize with what they are doing, but also advocate for consistency in the application of consumer protection provisions, both at national, that is between sectors, regional, and even international.
Okay, thank you so much, Mr. Hussein. I know you'll get a couple of questions from the audience. I want to go for another question, but this is going to Mrs. Rita. What international best practices in financial consumer protection and complaints handling could be adopted to Uganda's context, and how can Uganda balance global standards with local realities? If you could take, I know it's a big topic, but if you could take like 5 minutes, would be great.
Thank you so much, and good afternoon, ladies and gentlemen. Regarding the international best practices for consumer protection, there are OECD principles that have been set that guide consumer protection. These require to have a detailed legal framework. We've seen some jurisdictions have a standalone law on consumer protection, whereas here in Uganda we have different laws, but we thank the government for recently enacting the Competition Act. That shows that we are moving into the right direction to ensure that members are protected, and even there are no cartels from the big service providers, so there should be fair competition. The other best practice is access to information in these financial services. Do the members know what they are taking on? If you're giving me a loan, do I know the cost of this loan? Do I know how much I'm going to pay? The collateral that I'm giving you. We have seen scenarios where people are given loans and they give their land titles as collateral only to sign an agreement of sale. So you're not disclosing to this member or to this consumer what they're actually taking on. And the other best practice is the role of the different regulators that government set up. For example, Bank of Uganda, UBRA, Capital Markets Authority. In the different sectors that we regulate, are the members that we serve aware of the services they take up? For example, in the retirement benefit sector, we encourage members to save with the different retirement benefit schemes, and members make their contributions. But we have seen an increase in unallocated benefits. A number of schemes, even the biggest scheme, NSSF, has unallocated contributions. But this is money that was put in this scheme for a particular member. How can you tell me that you can't trace this member? So whose money is this? You hold it and it's accumulating, you're putting it in a reserve. So what we've done as UBRA, our market conduct department, is pushing all these schemes to make sure that you advertise and reach out to these members. Let them know that they have money in the scheme. And sometimes it's from the information that members give. They don't give sufficient information. You leave one employer, go to another, and leave your money in a scheme. So if nobody contacts you to tell you have 100 million in this scheme, that money remains there idle, and it's accumulating. So we have a duty to sensitize members and to remind them, just like the banks do and publish a list of dormant accounts. Even for the schemes that we regulate, they should be publishing a list of all these people whose money is lying idle in these schemes. Another best practice is complaint redress. Consumers of financial services have a number of complaints. They've been cheated, they've been given wrong information, and they have nowhere to run to. So starting with the regulators, a number of the regulators have put in place complaint resolving units where these people can come to. And we also appreciate the initiative that has been set up to handle complaints. But this is an issue that many consumers of financial services need to know, that in case I am cheated or in case I am not sure of what I'm signing, I can go to someone and consult and be advised on what best to do. Thank you.
Wow, thank you so much. And we all agree that there is that information gap that exists in this space. So any efforts that are directed towards increasing the awareness of the public or the financial consumers about the products, the complaints redress mechanisms that are that they can use, they really have a very big contribution to the financial inclusion goal that we are all aiming at. I think, Robert, you have something to say?
Yeah, thank you so much. Anthony, just wanted to say if you could wrap up that bit, then we take questions. And just before we do that, I want you to join me in recognizing the permanent secretary, stroke secretary to Treasury, Minister of Finance, Planning and Economic Development, Dr. Ramadan Gori. Thank you so much for coming, sir. We may proceed, Anthony.
Thank you so much. We would want to take some questions. Then after, I'll give each panelist 1 minute to finalize the topic of building consumer trust.
Thank you. So by show of hands, we are going to take 2 questions from the audience. It would be nice if we can hear from those who haven't spoken so that we balance it off. But the event that we don't have new people asking, we take on the old ones. And here, so please unmute and ask your question. And now that PSST is here, go straight to the point.
Please let us know who the question is directed to.
I'm bad again, so my question goes to Dr. Teopista. So, I mean, as we've said, I mean, we were dealing with a jungle where consumers are struggling to get justice after borrowing money. So the question is it time to adopt what I call triple due diligence, that as a consumer you have to is it possible to do some due diligence on yourself, do some due diligence on the financial where you're trying to borrow money, and then also do financial due diligence on someone who is guaranteeing your loan. Would that help reduce on the pain of people being foreclosed, losing their property after borrowing money simply because they not read their loan agreements properly? Thank you.
Yes, thank you very much, the panel and the moderator. Mine will start with a comment and a few observations. And once again, Chimera Henry, I work with the Consumer Center, Consent. I liked the categorizer you gave. Increased access does not mean, with me on my notes I added, doesn't mean quality of service. It doesn't mean satisfaction. In many places, there is no alternative B. So I can take a bitter pill because I need to have that bitter pill because there's no sweeter pill. Why am I saying this? Consumer Voices 2024 report and what is coming out this year, we are coming out with from harvested complaints. Customer care, customer care, customer care. Unresolved consumer complaints. And looking at the theme that we are looking at, the thematic theme for the session, consumer trust, we can never have it if we have grumbling customers. One of my resolutions and recommendations, can we ground and scale up consumer-centric businesses? No compromise. And it is something that I hope from policy, legal, regulatory framework meetings saying, we will never have a thriving, and we will never have the tenfold to $500 billion if the majority and who are Ugandans do not have trust in goods and services.
In conclusion, sir.
In conclusion, I would like to say that as a country, when you listen to banks, they say, according to Bank of Uganda, we would like to protect the money of our customers. But they don't bring in the element and take it and make it an issue. We also want to make our customers happy, who are the majority. So as I conclude and picking up from Dr. Topist, the issue that you raised, people sign without knowledge, and also a colleague from Ministry of Trade. But when we look at the financial consumer protection guidelines that are there today,
thank you, we are running out of time.
The financial consumer protection guidelines put it out very clearly that there should be a window of where the consumer, the customers are advised. Unfortunately, taking on the experience, that window period, if it is failing, Andrew, what is the problem? Are the banks that you supervise not adhering to the national regulations?
All right, Andrew will answer and mention what exactly the problem is. Your question is hard, so we are going to take two from the online participants, and then the panel can answer, and then we move to the closure of this engagement. We have a question from Mugerwa Martin. Is BOU planning to move away from Excel sheet-based reporting to API level reporting? Without this, can we trust consumer protection team at BOU? Are banks stroke fintechs ready for this? That feedback is from Mugerwa Martin. The second and last person to ask online is Mugerwa, or same person actually. His question, second question is, how does BOU plan to leverage open banking as a strategy to lower the cost of transactions and merchant acceptance? That's the feedback we have online. Over to you, Anthony, to coordinate.
Thank you so much, Robert. And I think I'll start with Teopista. You have a question to answer, and as brief as possible.
Okay. I remember when I was doing training in banking, they told us for everyone to remember what banking should be. You should relate it to home, to relationship, for those who are married. So before I answer him, I know that trust is two-way. It cannot be built from one way. And there are specific things, just like in a relationship, that must be followed for trust to develop. And I think one of them is openness, transparency, but most importantly, obligations from each party. So we developed a training module. It's called Responsible Borrowing at Inshuti, which we can be able to share with you. And in that pack, we are showing that the bank has a role, but we cannot be there and ignore the character of the borrower. And most of us here have relatives you want to send money to, and they will say, don't put on that one. I'm still, you have heard that. Eh? So, yes, we are looking at both parties. As financial institutions are being hanged on lack of transparency or putting themselves in the shoes of the borrower, but we also know that some Ugandan borrowers are not very easy to deal with. We had a case of a lady, and she said she never saw in the offer letter that the pre-disbursement conditions had her part, like her role, what she had to do. So we are aware of that, and we are also looking at really the relevance of certain lending models to consumers. So we are aware of that. I hope that has answered your question.
Thank you so much. Thank you so much, Teopista. The next question, I think, went to Andrew. I think 2 or 3 questions went to Andrew. The rest actually went to you, Andrew. So please.
Thank you very much for the questions. The comment from Henry, I think I hear you loud and clear. The guidelines are in place. We have an enforcement team that periodically visits the institutions. And I do agree that sometimes there are gaps therein. But also, like somebody said, it is a two-way affair. I have gone into a bank, I've been advised, at least on paper, and I've endorsed and confirmed that I've been advised. So it poses certain complications. But I think the real intervention that the central bank is taking around this whole story is to focus on empowerment. We've spent a lot of resources on consumer empowerment. If a consumer is empowered, if they know what they are going into, then we shouldn't even be having this conversation, because I will know what product suits me, I will know what questions to ask, and I will know the channels, to escalate if I'm not satisfied. So the central bank is doing a lot of work around awareness, which is foundational for a financial services consumer. But beyond that, again, I'll go back to the bigger question that I spoke about in my opening remarks, and that is, if this hasn't worked, and for now I'm speaking broadly, because you have banking, you have insurance, you have the capital markets, you have retirement benefits. If it is not working, then maybe the question of the ombudsman is I mean, it's a timely debate. And so the Inshuti development, I think, is a very timely one. Probably the question now would be, we'll see how it works, and then the other questions will come. The legal basis, how do you sort out those legal questions and those other potential complications that are likely to come up? But I think the time is ripe for that conversation to happen, and maybe that is something that we need to be exploring. And that takes me to the open banking question. Now, the central bank is actually already doing a foundational assessment of where we are in terms of open banking. This is not yet in the public domain, but we are doing foundational assessment of what open banking would look like in the Ugandan market. But of course, it goes without saying that for open banking to work, then you must also have the digital, rather the foundational blocks in place, especially on the digital public infrastructure. We all know NIRA is doing a good job to upgrade the IDs to the second generation IDs that are digital. Without proper identification, you can't talk about open banking. The central bank is working on reforms around the credit reference infrastructure. The central data hub is being implemented, and this could be another foundational building block, because it's about information sharing in a safe and trusted manner. And that is a piece of infrastructure that is underway. We have other infrastructure projects going on, stakeholders consultations going on things like the national switch, which is another building block when it comes to settlement of associated transactions, and this very important conversation of the empowerment for consumers. Because with open banking, you're basically allowing certain institutions to access your personal data. So those are key initiatives to underlie it. Lastly, is the central bank planning to move away from Excel-based templates? Yes, very much so. In fact, we are underway. We are implementing a key project, the SUKTEC project, which will leverage emerging technologies to get real-time data access to the institutions, in addition to the AI strategy that I talked about. So I think that question is answered in the affirmative. Yeah, I think those were the questions from us. Yeah.
Thank you so much, Andrew, and thank you, Tapista, for answering all those questions. I think the other two panelists didn't have questions. I'm giving each one 1 minute to conclude. 1 minute, so that we can end this panel.
Okay. Thank you. Thank you very much, panelists and our listeners. One thing I want to say in 1 minute is that as we promote financial inclusion, there are key aspects that we may need to incorporate in our model, and one of them is data protection. The other one is early redress mechanism. You know, when a consumer is not satisfied and his complaint addressed early, it builds trust and confidence. So that is an issue that we may need to work out.
Sorry to interject our panelists, but the PSST has another engagement shortly now. Please conclude, then we can let him speak to us.
Okay, the last one is building a stronger consumer movement. We know that once we have a strong consumer movement, it will enhance awareness creation so that some of the matters that we are discussing now may be addressed. Thank you very much for listening.
Thank you so much, Hussein. Concluding remarks, 1 minute.
Thank you. My concluding remarks is we can work together as all sector regulators to enhance consumer awareness, and they should also be told about their obligations, because we've seen with access to easy loans, also the indebtedness in consumers is increasing. So let's encourage them, borrow only when you need to, and you know what you're going to use the money for. As regulators, let's sensitize all the people that we regulate and ensure effective consumer protection. Thank you.
Thank you so much.
Thank
1
you.
minute. 1 minute for you.
I think for me, it has all been said. The takeaway is that an empowered consumer starts with foundational financial education. And I think it is an obligation for all of us, regulators, financial service providers, to prepare the consumers before we give them the financial services.
Thank you so much.
I love the fact that he's now looking at prevention before disaster. I just want to share that one thing we have to know, that currently the redress system is scattered. We need to find a way of consolidating it so that somebody can even sing it as a choir song. Then the access, I appreciate that, yes, it sits mainly with the central bank and the different establishments, different financial institutions. But if me as Teo, the way you see me, I have had a problem accessing that building, I'm just wondering what my mother-in-law would be like from Kalere Market. Then definitely we have to be serious with the language barrier, especially in the different campaigns we do, how we are going to cater for the different people. And as a gender specialist, the power balance, definitely. From the side of the consumers, we have seen a lot of fear and the confidence levels and complete lack of information of what is out there. So as Nshuti, we are saying, let's collaborate with all of you people and try to use the different teams we have to disseminate information, but most importantly, to make these people be confident and to know that there is information out there and it is for them, and all the interventions are for everyone, irrespective of race, age, level of education, or location in the country. Thank you so much.
Thank you so much. I appreciate. This is the end of our panel, and thank you so much for the great participation. We're going to request for a picture, then we're done.
Thank you so much. Let's clap for them for a job well done. Thank you, Anthony, the moderator. Thank you, Andrew Kawere. Thank you, Musiho Hussein. Thank you, Rita. Thank you, Theopista, for that panel discussion. Honorable Minister of Finance, who left earlier, but right now we have the Permanent Secretary and Secretary to Treasury, Minister of Finance Planning and Economic Development. This almost brings us to a close, but we can't close without having the closing remarks. But before that, I want to recognize Dr. Bob Monene, who is the Assistant Commissioner, Financial Services at the Ministry of Finance. And from the Bank of Uganda, please join me once again for recognizing Mr. Andrew Kawere, who is the Director, National Payment Systems Department. PSST, by way of a brief, we started off with remarks from the Deputy Governor, Professor Augustus Nwagaba. Then we had the Minister of Finance, Honorable Matia Kasaija, with us, also made remarks. We had a first session on inclusive financial products for the unserved and underserved. We had another panel discussion on mainstreaming green financial instruments for a climate resilient Uganda. And the panel PSST you found ongoing was handling consumer trust in financial services. That is what has transpired today, and we've had very good feedback from participants attending physically, and we had feedback from YouTube, LinkedIn, and other online platforms, which made this interactive. I now take this singular honor of requesting the Director, National Payment Systems at Bank of Uganda, Mr. Andrew Kawere, to come and invite you to speak to us, sir.
Thank you very much, Robert. Ladies and gentlemen, allow me to say one or two things, but first to recognize the presence amidst us of the PSST. You're very welcome, sir. Thank you for gracing this event. For the rest, allow me to stand on the already established protocols, but my remarks are mainly to deliver a vote of thanks. I would like to thank you most sincerely on behalf of the Secretariat, which is the Bank of Uganda, for taking off time to join us for this Financial Inclusion Forum. You'll all agree with me that we've had very, very wonderful discussions. There are lots of takeaways from where we started earlier this morning, key amongst which is that yes, it looks rosy, the numbers are good in many respects, but can we convert those numbers into better aspects, especially when it comes to usage of these financial services? Okay, we've seen so many facets of the strategy making progress, but I think the challenge, which is probably one of the takeaways, is how this can turn into better livelihood, how this can turn into reduced poverty, and how this can turn into the real socio-economic transformation that the Deputy Governor talked about. So I would like to assure you that the Secretariat has taken note of the takeaways, and these will be subject to further discussions during our technical arms, which are the financial inclusion working groups. Let me also note that soon we shall be embarking on the mid-term evaluation of the strategy, and we call upon you once again to support and be part of this journey. It's almost 2.5 years down the road, and it's about that time that we're going to ask ourselves, how well have we performed? How well have the initiatives been implemented, and to what extent have they contributed to achievement of the envisaged outcomes of the NFIS2? And in this regard, we're also planning for the next FinScope survey, which will give us an indication of how well we are doing, especially when it comes to the demand side indicators. So with those remarks, allow me once again to thank you, ladies and gentlemen, but also to thank the Secretariat that has been working behind the scenes to put this together. We thank our partners, the Ministry of Finance, PSST, and the entire team at the FSD department. Thank you for the support. Thank you for working with the Secretariat to see this come to life. And with those few remarks, ladies and gentlemen, allow me to invite the PSST to come and deliver his remarks, and after that, close the forum officially.
Thank you very much. This thing is too short. It is for some people. Okay. Better. You are an innovator. The director from the central bank, all the senior government officials who are here from my ministry and across government, but most importantly, the members of private sector and the civil society who have taken time to come and be with us. And those from academia, I hope there are some academia here, because they are the ones who research and give us facts that inform these initiatives. And all of you, distinguished ladies and gentlemen, I know you have been seated here since morning. It's lunchtime. I will be very brief. And yet I need to thank you, first of all, for your active participation in this forum, your thoughtful contributions that you've made, but also the practical insights you've shared to improve financial inclusion. I always say that there are arguably two opportunity equalizers in life. One is education, the second one is financial inclusion. They are the two opportunity equalizers. We are what we are because, first and foremost, education. Then those who may not have the opportunity of a good education, financial inclusion, whether they inherited it or they've earned it. I will spend a few minutes and I highlight empirically grounded ideas on financial inclusion so that they inform us as we improve. Empirical research shows that providing low-cost bank accounts increases formal savings and financial resilience. We must stop providing financial support without a formal bank account if we want to succeed in a financial inclusion journey. This can be done through low-fee or mobile accounts, and it increases household financial stability and productive investment. The number of researches which have been done in Kenya, in Malawi, in Nepal, in the Philippines, that have proven beyond doubt that when you formalize financial access through an account, a formal account, you succeed. Number 2 is on digital financial services. Have been found empirically to dramatically extend inclusion where formal banking is limited, especially for women and rural households. This has been done here in Uganda. They have studied MTN Uganda and the mobile money, but also M-Pesa in Kenya, and is found to be very effective in extending inclusion. Number 3 is what we have been, I've heard here being discussed, financial literacy. Financial literacy enhances effective use, but design matters. Design of financial literacy matters a lot, because evidence shows that mixed results have been found from financial education alone. Impact increases when the lessons are practical, they are timely, and context specific. The lesson here is that as we do financial literacy, knowledge interventions must be simplified. And I think that's what Tau Pista was talking about. We need to stop being elitist. We compile things in English. Let me tell you, in Uganda here, the people who can ably comprehend English, if you looked at the census data, you will be shocked. So we are speaking to ourselves. You must simplify these things in the languages which people understand, but also should be behaviorally informed. You need to apply behavioral finance and linked to real financial products. Number 4, here I'm talking only about researched things, not opinions. We should also stop discussing opinions. My opinion is this. Your opinion is not researched. May be wrong. These ones have been tested scientifically. Number 4, credit, microcredit has modest effects on business investment and income, but not necessarily poverty reduction. The message here is that microcredit can empower entrepreneurs already running small businesses, but it is not an effective tool for poverty alleviation. Microcredit does not alleviate poverty, research has found, but it can help entrepreneurs who already have businesses to grow them. Number 5 is on digital KYC, digital know your customer systems. They reduce transaction costs and expand credit scoring. Therefore, combining mobile transaction data with machine learning improves credit access for those consumers we call thin file clients. The message here is that if we want to bridge information gaps to enable inclusion without the traditional collateral, these securities which banks ask people, we must incentivize more fintech and data analytics. Fintech, fintech, fintech. So that they can extend credit to those who have improved their KYC. Number 6 is on gender-targeted interventions, such as mobile accounts with the privacy features or digital wage payments. These close financial gaps. Why? They increase female financial control. By extension, this boosts household nutrition and schooling outcomes. In other words, the empirical researchers are telling us that empowering women financially yields higher social returns than when you empower men, but only if you help them to hide the money from their husbands. That's what they are saying. Okay? I'm trying to simplify. There must be privacy features in these gender-targeted interventions. Don't give women money openly. Their husbands will take it, or they will harass them. So, and also wage. Don't pay women openly. They will take their money. You need to bring in those interventions. This is research, not my opinion. Number 7, behavioral nudges, what we call behavioral nudges, such as reminders, goal setting, commitment savings, significantly improve savings rates and loan repayment. Therefore, to increase impact, we must align product design with the real human behavior. Those prompts which you make reminding a person who is supposed to save daily. Every morning you wake up, your phone should remind you before you spend on a beer, save. Nudge them. They have found this very effective in Indonesia, in India, and many of those territories. We need to adopt them. And lastly, supportive digital and regulatory ecosystems, such as agent banking, interoperability, and consumer protection, achieve faster inclusion. As government, we are keen on promoting financial inclusion, as we all know, in particular by ensuring access and lower cost for the last mile beneficiary. In the past 10 years, the government of Uganda has invested over 11 trillion shillings, 11 trillion shillings, in about 10 years in wealth creation initiatives. UDB, 1.9 trillion. The PDM, now we are coming to 4.4 trillion by end of this financial year. Emyoga, 760 billion. Agricultural credit facility, 463 billion. Youth livelihood, 207 billion. Youth venture capital fund, 12.5 billion. Women entrepreneurship program, 168 billion. Small business recovery fund, 100 billion. The Invite project, this one is yet to disburse, but we have secured the money, 800 billion. This one is intended to provide export guarantee scheme for our exporters. Then the Grow project for women, 824 billion, and UDC, 1.4 trillion. I think my minister highlighted some of these in his opening remarks this morning, but I wanted to emphasize them. I am glad that this year's Financial Inclusion Forum's theme has been centered on moving from access to usage. How do we transition? It's like this market access. We talk of market access, but when the sellers cannot sell, that's not a good market. So likewise, financial inclusion should come with the usage. Our journey has been impressive, as I'm sure they have told you how we are performing with the Finiscope numbers, but we are still lagging behind a few countries amongst our peers. We need to close that gap. And our inclusion now is mainly driven by digital, mobile money, but also a little bit of agent backing, but mainly digital, which shows you that if we leverage digital fully, we shall be able to include all Ugandans in the next few years. We now need to accelerate this since we still have that gap I've mentioned. We need to cover the gender gap as well, because about 14% gap we have is one of the largest in the world. The men versus women. Finiscope showed us that the proportion of men with access to finance are 80%, women 66%. We must close this gender gap. But as I've told you, we close it with the practical solutions informed by those empirics I've shown. Therefore, ladies and gentlemen, let's design people-centered financial products around lived realities of the people we seek to serve: a farmer in Lira, a trader in Arua, a border rider in Soroti, including that one on a bicycle, a refugee entrepreneur in Nachivale, a fisherman in Kalangala. I could go on and on and on. Real people, because sometimes we design good products, but not for Ugandans. Sometimes I see products and I wonder, are these for Ugandans or for Americans? Please, Uganda has people who are fishermen in Kalangala there, design products fit for them. There is when I was still in academia, there is a wonderful study which had been done in Kerala in India, where somebody designed a simple innovation to preserve people's fish by creating, because they couldn't have refrigerators. For us, we buy them freezers. How can you take freezers to a place where there is no electricity? How will they use? Until you have gotten electricity, you need to innovate. So this one, what did? They created smaller ponds near the lake. So these guys, when they come from the lake, they transfer their fish from the boat to the pond now. They keep it in the pond so that it doesn't get exposed to bacteria. And this increased people's incomes by a huge margin. And it was a simple initiative, just getting the ponds near the water source, and they dump them there. So we need to also come up with the real solutions to real people we have in Uganda. I want to end by telling you that for us in government, we have now tested one simple system which can be effective. This is the PDM system. It has shown us that we can achieve all of these things we are talking about at a national scale. We are succeeding because of full digitization. We are not leaving anything to chance. We use the PDMAS to identify eligible beneficiaries, and then Wendy to send them the money directly from the treasury, no middleman, and then Zaid to monitor and ensure that this money goes to the right beneficiary whom we identified, and that beneficiary is using it for the right investment that we appraised. By leveraging technology, we have removed the middleman, we have cut out leakage, we have tracked the beneficiaries to ensure they are investing in wealth creation. That's why you are seeing tranquility now economic tranquility. These are the people you had left out. They are the voters of you, these politicians. That's why you see now the Uganda attend rallies peacefully and they go back home. Some people are wondering, why are there no this noise and so on? Because people have been included in the financing models of the country, and they are investing in real economic activities. They are the ones that are keeping the inflation low. They produce the eggs which you are eating, the vegetables, and those other animals I don't want to talk about, and so on and so forth. So they are helping the country to become more inclusive, but also more productive. Therefore, we are going to extend these systems to all other government-funded wealth creation programs. No more providing cash to government people to take it to the people. They can never take it there effectively. All the government programs are going to leverage technology to work. As I conclude, I have one more point. The issue of consumer protection. Financial inclusion cannot work in an environment where consumers feel unsafe, uninformed, or unprotected. Globally, the financial system, in particular the credit market, was designed to protect the lender. We are working with the Nshuti Financial Consumer Advisory Center to establish a formal framework for enhancing consumer protection, promoting financial literacy, and safeguarding the consumer rights. Because on this, I want to tell you, the Bank of Uganda will never succeed in protecting the consumer effectively. Why? It's not designed to do so. It is designed to ensure financial stability. And financial stability is about ensuring that the money which is lent out is brought back at any cost. And we are doing very well on that one. We are doing very well. I congratulate the central bank. We shouldn't give them another task now of also ensuring that those who have taken the money are protected. So they have put in place what we call Credit Reference Bureau. To do what? To enable the lenders to check on these prospective borrowers. Who is this Ramadan Govi? Has he ever borrowed from a financial institution? Is he lying that he doesn't have a loan when he has a loan somewhere? That is what the Credit Reference Bureau is doing. Now, I asked a question about 4 years ago. Who is asking a question on who is this lender? Has he ever cheated someone? Has he ever engaged in predatory lending, where he lends you money with the intention of taking your collateral? The answer was, there is nobody. But the central bank teaches people financial literacy and also provides a desk where they can report if they are cheated. But as you know, and I think Nshuti told you, the topista there, the central bank is very, very far from the people. It is designed to be an independent, stronger institution. You don't just go there with the slippers. You must know to speak English. You must have an appointment, or you get it registered. You first stand and look in a certain machine. It verifies you that you are the one. Then you go. Now, an ordinary person from Kalangala, where will he find the central bank to report? So I want my ministry, please, FSD, effectively ensure that the customer reference bureau also works effectively, so that the people can have a recourse where they, and that will take away all these debates we are having. They are symptoms of a disease. The disease is the financial system. The regime is made in such a way that it attends to the lender, protects the lender, but not the borrower. And we are going to address that. So thank you very much, ladies and gentlemen. I thank you, the organizers, my team at the Ministry and Bank of Uganda. I thank the presenters and all of you, the participants. Please always remember, from today, tenfold growth is the keyboard. Financial inclusion is one of the key buttons that are going to enable Uganda to become a $500 billion economy that works for everyone. It is now my honor to declare this Financial Inclusion Forum of 2025 officially closed. Thank you.
Tenfold growth is the keyboard. Financial inclusion is one of the buttons. One, thank you, Permanent Secretary to Treasury, Dr. Ramadan Gobi, for the very rich and insightful remarks. Let's add him another round of applause. And most importantly, we thank you for the economic tranquility that we see in the country. Thank you. And that marks the end of our engagement. We want you to kindly give us feedback. We have a QR code. Just take a minute, scan that code, and be able to attempt the question. There are about 3 or 4. It will take you less or not more than a minute. Please give us feedback so that we can serve you better. And then very finally, and before we sing the anthems in a reverse order, I want to inform you that lunch is ready. And lunch is going to be served at the Paradise Restaurant. And each one of us is supposed to go with a coupon. If you don't have a coupon, please let us know. We can give you one so that you're able to have that ticket that qualifies you to have lunch. I now request us to stand up for the anthems in a reverse order led by the DJ. After that, we go for lunch. My name once again is Robert Wagonza.
Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu, jumuiya yetu sote tulilinde, tuajibike, tuimarike, umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Thank you so much once again for coming. We can now proceed to have lunch, but make sure that you first scan that QR code and give us feedback so that we are able to serve you better going forward. Thank you and God bless you. We also inform you that one of our own has misplaced his bag. In case you see a bag near where you are seated, please pass it on so that we can hand it over to the right person. There's a missing bag containing very important information. Please pass it on to us so that we can hand it over to the right owner. Once again, if you haven't scanned that QR code, kindly do the needful. Just scan using a phone and give us feedback. It will take you not more than a minute as you go for lunch. And just remind you, lunch is being served at the Paradise Restaurant. National Payment Systems Department team, you are requested to stay behind. There is a very important communication that we want to pass on to you. National Payment Systems Department team, come to the podium point. There is an important communication we want to pass on to you.
We must ask what finance decision. Islamic financing. We are basically talking about that sector.
And thank God the bag has been recovered, so we want to thank whoever has supported in finding it. So we have nothing lost as of today. Thank you. National Payment Systems Department team and the Bank of Uganda team, we have a group photo now that we are going to take, but also there is an important communication that needs to be passed on. So team BAU, kindly come forward so that we have that photo taken.